influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Monday morning, good morning. Hope you had a great weekend. We need to think about where we're going to go from here. Friday does, though, provide some clues. Take a look at this chart. This is Europe falling, going sideways. The US market then accelerating to the upside. Little fade into the close, I know. But that's probably, to a certain extent, why we're, Lizzie, this morning seeing European futures higher. There doesn't appear to be a sort of obvious catalyst, and we're going in a different direction to what we saw out of Asia markets.
Yeah, the weakness off the back of the China pessimism in the Asian session not seeming to be transferring into the European session this morning. Futures pointing 0.9% higher for Euro Stoxx 50 futures. The FTSE a little less so because we have the miners here, of course. Iron ore down currently. The DAX even set to be higher. We've had those Conti earnings this morning downgrading their sales outlook ever so slightly. How much of that is already expected? Guy?
I'll pick it up. It's certainly interesting. You mentioned the Continental story. It's going to be a fascinating one in the face of, on the heels, I should say, of the U.S. election, perhaps ahead of a German one as well. How much of those downgraded sales forecasts actually weigh on the stock? On the bright side, though, maybe seeing some movement in some of the other sectors. Novo Nordisk is, of course, top of mind as well. Joe Easton was there talking about them being on the positive catalyst watch by J.P. Morgan, potentially 10% upside for some of the major heavy hitters of the stock 600. Of course, Burberry and LVMH, we are on takeover watch. And if we do get that takeover news, is it interpreted as a positive by the market? Guy, not every M&A piece actually is, but of course we know that Burberry has been struggling in a big way. They've been trying to reach that mass market. They haven't gotten it. Could Moncler be the answer?
Could be. Certainly appears to be, judging by the market pricing this morning. Market seeing potentially that story as a positive one. Okay, here we go. Monday's session is almost upon us. Time for the opening trade. Let's take a look at the numbers that we are seeing populating our screen. The FTSE 100 already up by 0.2%, but as Lizzie says, keep an eye on the miners this morning. That could be an area of interest. Elsewhere, keep an eye on healthcare, as we've been hearing. Novo Nordisk could be a positive catalyst for this market this morning. It's interesting that Conti is not being taken as a negative despite the sales downgrade that we're seeing on the top line. And we'll hear from the CFO very, very shortly about that story. The IBEX is up by 0.7%. But the sense here seems to be that there's basically an arbitrage trade. We are pricing in the pickup that we saw late Friday in the United States, our time here in Europe, back into the European market space this morning. And that's why you're basically seeing most markets opening up this morning, including the FTSE 100, 0.6% to the upside. Most of the main markets certainly having a positive performance this morning. Lizzie, kind of break this down for us. What else is going on below the surface?
Yeah, if you look at it by sector, you've got every sector in positive territory this morning. The banks leading the gains. They're higher nearly 1%. Bottom of the basket are basic resources, higher 0.3%. But everything in the green. Look at those miners, as we were discussing, off the back of the China stimulus news. You've got Glencore higher 0.2%, but Anglo flat to the downside. BHP lower nearly 1%. And that is potentially why you've got the FTSE slightly weaker than than the rest of the stock 600. But it looks to be a positive start to the week after a pretty dismal one last week, Kriti.
A fairly broad rally. Only 24 stocks in the stock 600 are trading lower. Of course, we're only about 90 seconds into that opening trade, but that tells you something, Guy, about some of that risk sentiment. When we're talking about some of the early movers, a lot of them is what we had telegraphed right before the start of the trade. Burberry, right out of the gates, higher by about 3%. So that's going to be we're going to be keeping an eye on. Another, of course, is Continental, as Lizzie was pointing out. The DAX, of course, not open yet, but when it is, we will bring you those numbers. The Burberry story, the market really taking a stride. Novo Nordisk as well, that JP Morgan stamp of approval certainly helping those shares.
Yeah, in terms of the points, that's certainly where the gains are being made this morning. So it's Novo leading this charge to the upside in terms of the upside on the European markets on the stock 600. ASML, HSBC, Siemens, Roche, Schneider, Safran, all rising this morning. It's a fairly healthy mix. You're getting a lot of tech companies rising this morning. The banks, as Lizzie was saying a little bit earlier, and some of these health stocks doing all right.
And some of the underperformers we should mention are, again, coming back to the energy sector, Glencore, Rio Tinto, and even the drop there, that underperformance there isn't that much of an underperformance. You're actually not seeing that red in the screen. Again, speaking to that risk sentiment story.
Yeah, we're still waiting for Conti, but I will mention Hanover Ray had its earnings this morning at 6:30. They had this miss on EBIT, but they raised their profit target for 2024, and actually those shares higher 2.1%. Still waiting for Conti.
Moncler's a little softer, but not by much. I guess this isn't a big move to the downside that we're seeing being priced in. This is a story that feels like it's evolving rather than coming as a big shock.
Yeah, we should mention that Continental, we are getting those opening trades. They're higher by a whopping 7.5% and still climbing. The DAX is also in the green. We're going to have to do some digging on why that is, given that kind of gloomy picture that Continental has laid out.
Is it a gloomy picture? There's so much bad news priced in.
Yeah.
Like, how much more gloomy can you get? Yes, they're downgrading their sales guidance a little bit, but it's not a... The initial language I saw was slight. So maybe there were some fears that actually the downgrade could have been significantly greater. So actually maybe this is, relative to expectations, quite a small move. There's still this idea that maybe the spin is on track. That you could see maybe the auto unit being... We don't know yet how it's actually going to be spun out, whether it is going to be spin out, whether or not the shares are just going to be given to shareholders. We don't know yet. But a more positive picture in Europe this morning, you could maybe argue.
Yeah, let's bring in an expert on that positive picture. Eleanor Lee, fund manager at Polar Capital, joins us around the table. She, of course, manages the Melchior European Opportunities Fund. We thank you so much. Let's start with that positivity we're seeing in the market today. One of the big conversations we've been having in the last hour has been how much of this is really perhaps a reaction to a very negative landscape in that so much has been priced in. Where do you stand on that?
I think there has been a wholesale negative view on Europe. And we had some negative earnings revisions post-earnings season. But we're getting to a point now where that can be a contrarian indicator. I mean, you're seeing that. You just mentioned Conti up today on potential downgrade. When you have such negative earnings revisions, that can be a contrarian indicator, especially when we're seeing some of the data out of Europe is not that bad. The economic surprise index is turning up in Europe. And so that often could be a prelude to maybe we're at the end of earnings downgrades and this could be a better setup for the European market going forward.
But when you look at the fundamental narratives here, we are still talking about a fairly doomy picture in that Germany is of course, the weak man of Europe, the sick man of Europe, we'll call it. France isn't quite able to kind of perform and show up the way it has. Even the periphery that was outperforming is starting to slow those initial gains as well. I'm curious, a lot of that is baked into the currency picture. Is the weakness in the currency helping the stock market? Could it, if we hit parity?
I mean, it will help in terms of exporters, but I think really it's just all of the negatives are so well known. We had this with China in September, right? It was very weak valuations, overwhelmingly bearish narrative, and then the stock rallied on a bit of stimulus. So perhaps we get to the point when in Europe all of the bearishness is just so well known now, and you have valuations at record discounts to the US. I think there's been too much of this overwhelmingly, particularly post-Trump, that it's buy US, sell everything else wholesale, and that's far too simplistic a picture. There are companies within Europe that will benefit from a stronger US. To your point about currency, that will help certain exporters and those US earners. So this wholesale negative view on Europe is really an opportunity.
Okay, so then how does the valuation gap between the US and Europe change? How quickly does it shrink, if that's what you think it's going to happen?
So it's a 40% discount to the US. This is a record discount. Even if you look at it sector by sector, it's a record historical discount. That's where you're seeing some European companies look for secondary listings in the US. or primary listings in the US because they recognise that discount isn't rewarding the valuation of their business. So that trend is continuing. So that will be something which could help close that discount as people realise there's this discrepancy. And also M&A, right? The stronger dollar could make Europe a more attractive place for M&A, and that will help as a catalyst to unwind that discount. And then on top of that, we will have central bank rate cuts in Europe. We're just at the beginning of that cycle, and we're going into a period where the central bank rate cuts are will be accelerating versus the US. So that could help the real economy and help change some of that bearish narrative.
Yeah, really interesting, because we were talking about the possibility of jumbo cuts from the ECB in response to Trump tariffs. But I also just want to talk about your sectoral interest in defence and the response there to a Trump win. Do you anticipate him to follow through on what he's talking about, which would be, a quick end to the war in Ukraine?
I was a bit surprised on the Trump win that defence stocks in Europe were not down more, because people thought it increases the chance of some peace deal between Russia and Ukraine. Actually, defence stocks continue to increase on the Trump win, and I think that reflects the medium-term view that really there's a strong necessity for European defence companies to spend, and the onus will be on them in the Trump presidency to spend more. There's that structural growth story that needs to happen there, and also a big replenishment of supplies given the donations to Ukraine. So I think, we're seeing globally the pressure be on for defence spending. You've seen that this morning with Taiwan talking about buying more defence from the US. So I think the defence sector is actually a positive place to be, although if there is a Ukraine peace deal in the short term, there could be some pullback, but the medium-term trends are very, very clear.
If I think about European equity markets and I think about what's happened with Chinese equity markets, huge kind of move upwards on this expectation that we're going to see some stimulus. It's faded a little bit since then, but there is still this kind of expectation at some point that is delivered. Is there a moment like that coming for Europe, where suddenly we come in on a Monday morning and European stocks are going vertical?
I think the European market is quite different. I think the European political backdrop is also very different. There's not a big bazooka in the wings that they can offer.
So what is the catalyst? So it's just a slow grind higher? Is there a moment coming? Do I need clarity on Trump tariffs? There's not a sort of single moment in time where I should think, all right, if I miss it, I've missed that kind of huge moment. I can average into this trade.
Yes, I think it's more of a slow improvement. I mean, there's obviously some silver lining opportunities. I think with the German election, that presents an opportunity for part of core Europe to actually finally look at more of a growth agenda. So I think if that comes on the table, that would be a catalyst for Europe.
Right.
And if there is a China stimulus package that is believed deals with the structural issues within China, that will be positive for Europe. So it's probably more external in terms of what happens in China, and then also more stability in the political backdrop.
So European equities are basically beholden to pretty much everybody else in terms of what happens next. There's no kind of self-generated European story. It's basically a reaction to what is happening in the United States or a reaction to what is happening in China.
Well, European companies are very international, so yes, that is true. But I do think what's happening in Germany is interesting, and that could be an unexpected positive surprise next year if you can get, everybody's overwhelmingly bearish on Germany, if you can get more of a positive outlook for that country.
Okay. Well, yes.
Silver lining.
The silver lining.
And you could also get, the Draghi competitiveness report taken more seriously. Maybe this brings more European cohesion.
Yeah.
That would be, a positive story. For
the first big step on that is Creed's actually reading it, so that's the whole thing, apparently. Eleanor, nice to see you. Thank you very much indeed. Eleanor Lee, Fund Manager at Polar Capital. Let's take a look at what is happening on the Core 6 this morning. We've already mentioned what is happening with Novo Nordisk. It is trading higher, but everything seems to be trading higher this morning, as you can see. We're up pretty much across the board, across the whole of the Core 6 this morning, and you've got a pretty solid mix in terms of the sector story. Let's check some of the individual moves that we're working on outside of the Core 6. Joe Easton has all the details there.
So Continental, Guy, is the best performing stock this morning, up almost 8% now for the company. Pretty impressive, given it did actually downgrade a lot of its sales guidance for the tyre maker. The key thing, though, according to analysts, is around the spin-off that you guys were discussing. And in the statement, they do actually say that a lot of the requirements for that spin-off have actually been fulfilled at the moment. So it does look like they're suggesting that will progress. So that is what analysts are pointing to, and does seem to be the main driver. Of course, as we mentioned, that stock down heavily over the past year or so. Then in the luxury space, the Daily Mail's article getting a bit of attention. We can see the Burberry stock. That was actually the best performer on the Stock 600 at the open. Has come down a little bit at the moment. We're still up 1.5%, but Moncler clearly going the other way. So that report on potentially the Italian company taking over Burberry, that progressing, some of the staff apparently being informed that this is moving forward, and therefore we are seeing the market taking note of that report. Burberry getting a bit of a boost. Obviously another stock that's been slammed recently, of course, but it is gaining this morning. Then in terms of your insurance movers, Hanover Re in reinsurance, that looked pretty strong, and we're getting a 3.4% gain on that one, on their earnings out of Germany. Now, Direct Line actually did look a little bit weak. Some of their premiums in the home and motor parts here in the UK, their two big businesses, actually declining a bit. But the stock holding up, potentially a lot of that priced in. But Hanover Re really outperforming, up 3.3% at the moment. The other one in financials is going to be NatWest, because we got news that the UK government is offloading another £1 billion worth of the stock as part of the directed share buyback that the bank has agreed to, NatWest has agreed to. We know that the UK is selling the stake, but the timing of it is unclear. So that is the surprise in terms of it being announced today. We didn't expect to get that. So NatWest getting a bit of a boost, £1 billion worth of stock being bought back by the company. Then in terms of your ratings, firstly, we mentioned Ryanair. Now, this is all about fares. O'Leary has been warning around declines in fares for months now, but UBS says this is potentially over in terms of the earnings impact, and they reckon the stock will start to recover following a slump, and we're up 1.1% over in Dublin. And then finally, just to check back in on Novo, I was very excited about that one this morning, up 1.3% at the moment. Remember, they do have the data. It's called CagriSema, I believe it's called, the new drug. It's going to be even better than Wegovy for anyone looking to do that, and it is boosting the stock this morning, up 1.3%. The results will come out in December. Could be a driver, could drive a 10% gain according to JP Morgan, and the stock is rising in Copenhagen today.
All right, Joe Easton from our equities team with the movers at the open. We thank you. In short, green across the screen. The Stock 600, 0.9%. Green for the FTSE 100, higher 0.7%. The CAC Cajon higher nearly 1%. And the DAX in Frankfurt, 1.1% this morning. If you break it down by sector, just one in the red. That's basic resources because of the China weakness weighing on iron ore. We've also got Brent had been weaker, but actually now a stronger 0.2%. So a very positive start to this week. But next up on the programme, we are going to be speaking to EDP, the CEO Miguel Stilwell de Andrade. EDP really under pressure last week because of their renewable division's results and then the Trump win. How is he thinking about the future of ESG? A really interesting conversation given the backdrop of COP happening in Azerbaijan at the moment. So do stay with us for that conversation next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
History tells a story here. Both parties have for consecutive 30 years prioritized energy capacity build-out in the U.S. We see that continuing. Let's not forget that IRA has created build-out in both factories and projects, which for many reasons are related to nearly 3/4 of the states of the red color.
Henrik Anderson, the Vestas CEO, speaking to us a few days ago. He was speaking before the US election, expressing optimism about the renewable energy build-out story in the United States. But Donald Trump's resounding win in that election has seen clean energy stocks fall sharply across Europe. Let's get another viewpoint on what is happening here and where this sector goes next. Miguel Situel de Andrade, CEO of Lisbon-based energy giant EDP Group, joining us now. Miguel, thanks for your time this morning. Really appreciate it. What does a Trump presidency mean for EDP?
I think, first of all, just to congratulate President Trump on a very decisive victory last week. I think that was very clear, and I think it helps clarify the next 4 years. We have been investing in the U.S. for the last 20 years. We're one of the top 5 renewable players in the U.S., and we actually had a very successful growth throughout the various different administrations, including the Trump administration, the first one. So what we're seeing in the U.S. is a tremendous growth in demand for power, driven very much by AI and by sort of all the digital infrastructure, data centers and so forth. And so we're seeing a tremendous demand also for renewables. And that was true over the last couple of years, including back in the Trump administration. We're seeing it accelerating now. And we think that going forward, it will still be necessary to deliver renewable projects to support this growth in demand. So we're actually quite optimistic about the next couple of years.
Is it going to be better than the last few years? Miguel, the stock has really struggled over the last few years. Your renewables business stock has struggled over the last few years. What is the catalyst to get this stock moving, to get your business moving? What is the market missing in terms of the message that you're delivering? Why shouldn't we be pricing the stock a little bit higher? Is it because we see headwinds in the United States? Is that going to make it harder from here? Is it what is happening in Europe and its inability to maybe drive this project through in the way that we first anticipated? What is it that gets your stock moving again?
Well, a couple of things. First, I think there's now a period of great uncertainty, obviously, there's been a lot of speculation about whether the Inflation Reduction Act would be repealed or not. Our personal view is that the Inflation Reduction Act, there may be some changes, taking a scalpel to it. There's been talk about that, but that the fundamentals in terms of the tax credits for renewables or the investment tax credits, they will be there the next couple of years. It's been a bipartisan issue that's been agreed on over many, many years, and we would expect that to continue going forward. The other thing is actually delivering. EDP is actually delivering 4 gigawatts, so a record number of installations this year. So it's very much also about execution. And so I think once this uncertainty disappears, once we get more visibility on exactly what are the specific policies, what are any specific changes that will be made to Inflation Reduction Act and to the support that's beginning to the renewable build out. Hopefully then that will allow people to come back into the stock and, and we'll take it from there. I think the focus for us is certainly very much about executing, about delivering those projects.
Yeah.
As I say, we are seeing a lot of demand for them. And so hopefully that will come through over time.
Miguel, President-elect Trump has been very vocal on the campaign trail of, yes, renewables, but the specific mix of renewables. He's favored solar over wind. He's had the backings of some major players in the renewable space for that trade-off. I'm curious, in terms of your investment plans, your growth plans, does that create an incentive to invest more in solar over wind?
So actually, we were primarily a wind company back until sort of around 2020. We have actually been investing mostly in solar now. So the vast part of our portfolio investments are actually in solar, and they have been. I mean, most of the 4 gigawatts I mentioned are precisely in solar in the US. And so we do see solar as being a very big part of that growth going forward. We also believe very much in wind. Wind is a premium product. It has a more, let's say, the way that the wind blows is not just at a particular point in time. And so let's say that energy is more valuable than solar. So we think that both technologies actually are very important together with batteries. And we see that happening in the US. We see that happening, to be honest, in many countries around the world. So we see that investment continuing independently of the political cycles.
Miguel, talk to us a little bit more about that investment and where it's actually coming from. One of the juiciest parts of the private markets, for example, is in these infrastructure deals and in the renewable deals on the assumption that a lot of European governments, maybe the United States, will actually help fund that. Are you seeing that? Are you seeing that demand, that investment come from the private players?
Yes, exactly. We're seeing a huge amount of demand coming, for example, from the big tech, whether it's the Amazons, the Googles, the Microsofts. All of those, as they are having more demand for data centers and for the AI, they are then procuring that power in the market, and they're looking to us to provide that power. So we've actually seen a huge pickup over the last couple of months, and we expect that also going forward in terms of get me green, renewable power. I think one of the things you have to keep in mind is that renewables continues to be the most competitive source of energy out there, or of power out there. But on top of it, it's clean, doesn't pollute. And then on top of it, it also provides energy independence. I mean, I think Fatih Birol of the IEA said it recently, you can't hold hostage wind and solar. So if you have that resource, if the US has good wind resource and a good solar resource, why not use it? I mean, that is extremely valuable. That's true in the US, it's true in Europe. Europe also imports a lot of its energy, of its gas and oil from other places. Why not use your endogenous resources to actually produce clean, cheap power?
Yeah, but Miguel, just going back to Guy mentioning the beating that your renewables division took last week, would it make sense to make another attempt to buy out that unit?
Well, first, just to maybe carry on also from my previous comments, I think there are two things that you also have to take into consideration. One thing is this is a very capital-intensive industry. And so when interest rates went up, our stock took a beating. I think that was across the board. If we expect now interest rates to come down, at least certainly in Europe, that's true. I think that will also significantly reduce the pressure on some of these stocks. But going to your question, we've been very comfortable with the current structure of EDP and EDP Renewables. EDP Renewables was listed back in 2008, has gone through various different cycles. We see it as a way of giving a lot of transparency. Sometimes, it's out of favor. Other times it's been very much in favor. I mean, we had a huge euphoria around the stock back in 2020, 2021. But it does give a lot of transparency and visibility to that stock. So we're comfortable with the current structure.
And just going back to wind, would you sell your stake in Ocean Winds, perhaps?
Listen, it's a joint venture, as you know, with Engie, specifically for offshore. What we have been doing over the years is selling down stakes in some of the project companies, whether it's in Scotland or in France or even in the US. These are very large-scale projects, and so we try to de-risk them and bring on additional partners, and I'm sure that's something we'll continue to do going forward as well.
All right, Miguel Stillwell de Drande, CEO of EDP, we thank you so much for joining the program. Guy, Lizzie, he made a really crucial point there, is that there's so much investment. Why not pursue more? And I think my answer to that is because it's expensive. It's expensive for consumers. It's expensive for a lot of companies. That's why these deals have such a premium.
And it doesn't always deliver. So Europe at the moment, very little wind and not a lot of sunshine. That is not a great combination for renewables. So electricity prices have been going up on the back of that. So you do need alternatives as well. That's the other factor that we need to think about here. And that takes you back to your gas comments around what happens with the United States too. Kind of what does the energy mix look like in a second Trump presidency, I think is going to be a really difficult conundrum for Europe to solve.
So much of the conversation has been baked into that Trump equals a pullback of the IRA, and it may not be as straightforward as that. We're going to dive into that in the months ahead, of course. Coming up, we're going to dive into Burberry shares, though they're trading higher this morning on those rumors about a Moncler bid. Stick with us. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Monday, the 11th of November. It is Armistice Day, Veterans Day, and the British Prime Minister has journeyed across the English Channel. He is currently at the Elysee Palace. You're looking at a live shot coming to us from Paris. We are anticipating that the President and the Prime Minister will appear shortly. We will bring you those pictures. Interesting, I think, just to kind of take note of what is happening here in terms of potentially in an era of a Trump presidency, the British may be working a little bit more closely across the Channel with their European counterparts in terms of fashioning some sort of new, different track for the European security architecture and agenda. Anyway, we will continue to track what is happening in Paris in a little bit more detail. What is happening with the markets, Lizzie?
Well, I was going to say the last time I was at the Elysee, it was to witness the bromance between Rishi Sunak and Emmanuel Macron. So I'm sure Keir Starmer is going to try and create a bit of a warm relationship, given Trump is going to be in the White House. But as you say, checking in on these markets, it's green across the screen. The stock 600 higher 1.1% this morning. The FTSE is up 0.8%. You've got Burberry shares higher 3.5%, so offsetting some of the weakness in the miners because of the China stimulus disappointment. Iron ore down, basic resources the only sector in negative territory. But we can dig into the Burberry speculation now. Those shares, as I say, higher on reports that Moncler is poised to take over the British fashion house. The speculation coming from the Mail on Sunday, it says that staff at one of Burberry's flagship stores in London have already been told about a takeover. So let's get more now with Andrea Felsted. She covers luxury and retail for Bloomberg Opinion. I've been waiting to ask you this, Andrea. I mean, if this is true, do you think that this is the end of London fashion? We've already seen the likes of, Victoria Beckham, Vivienne Westwood going elsewhere to fashion capitals around the world.
I think whatever happens, Burberry will not be the luxury brand that it used to be. I mean, whatever happens, it's going to move from aspirations to really compete with the likes of Louis Vuitton to being much more like Coach or Ralph Lauren.
Lizzie's not a fan of that particular outcome by the sounds of things. Is this a done deal? This feels like it's a done deal, but you sat down here this morning, you went, there's no RNS. Why is there no RNS? There should be a regulatory statement if this is as close as it feels like it is.
I don't think this is as close as it feels like. I chased this last week and it certainly didn't feel like a deal was about to be done. The shares are up. The Mail on Sunday story was quite specific. If they are about to do a deal, then the takeover panel will force them to make a statement.
What's the hesitation here? Is there another suitor involved? I mean, what gets in the way for Burberry?
Well, there's a lot of things in the way. The market capitalisation before this morning's rise was about £3 billion. Given how much it's fallen, you've got to probably offer a 50% premium. Moncler isn't that much bigger. Probably can't do it in cash. Got to do it in shares. Some UK fund managers with a UK mandate can't hold overseas shares. You've got to then compensate them further for that fact. Moncler is also got quite a lot going on because it took over Stone Island a few years ago. That's not firing on all cylinders. We know Burberry needs work. There's quite a lot here that needs to be done. Now, the interesting factor is that Bernard Arnault, LVMH, invested in Moncler a little while ago. There's a lot in it for him. You get Moncler to do the heavy lifting. He gets the value of his indirect stake goes up. If it doesn't work, he can just come in and buy Moncler.
So that's the LVMH story. Other players from other parts of the world.
Now, the interesting one is Tapestry, because Tapestry has agreed to merge with Capri, or agreed to take over Capri. That has been effectively blocked. So they have appealed it, but nobody really expects that deal to come through. Now, Tapestry said last week they wouldn't seek immediate M&A, but the expectation is if that doesn't go through, they buy Burberry.
Speaking of cross-channel friendship.
Absolutely, we have one potentially unfolding. I'm not entirely sure who has manufactured Keir Starmer's coats or where it came from. But we do see the French president welcoming the British Prime Minister as we note and mark Armistice Day here in Europe this morning. There is a subtext here. There is a wider discussion that is happening around what Europe and the UK do next in terms of the security architecture that could come in a Trump era. So we'll keep a firm eye on what is coming out of Paris as we work our way through this morning. Let's talk Bitcoin.
Let's talk Bitcoin. Speaking of that Trump era, rallying past $81,000 for the first time. A lot of that having to do with Donald Trump's embrace of digital assets and the prospect of a pro-crypto Congress. Bloomberg's Valerie Teitel, I'm sure, has been reading into this quite a bit. Walk us through it.
Look, Trump made a lot of promises in his campaign about being crypto-friendly, one of which is that he wants all future Bitcoin to be made in the USA. He wants the USA to be the crypto capital of the world. He also commented on a national stockpile of cryptocurrency and said that he wants to create a Bitcoin Presidential Advisory Council. He also has said many, many times in remarks that he wants to unseat the SEC chair, Gary Gensler.
Well, it was funny to listen to Jerome Powell in the press conference being quite curt about questions about his future given Trump's win. Do you think Trump actually has the power to dismiss an SEC chair?
Well, it's a big question, Lizzie. He doesn't have directly the power to dismiss the SEC chair, but he can get rid of them on cause. It's just a matter of whether they have that. So a bit of gray area around that. But it's just another signal about how serious he is about a pro-crypto agenda. Gary Gensler has brought more than 100 legislation actions against crypto during his tenure. He says that crypto is rife with fraud and misconduct, and he believes that crypto essentially is under his jurisdiction. So they might have a fundamental disagreement on whether crypto as an asset class should be regulated by the SEC. Trump has promised supportive regulation, and the sweep of the House and Senate really does pose the fact that there will be a more friendly crypto legislation coming through, even if Gary Gensler is still there.
Just in terms of, do we know who's buying? Is this fast money that's coming in? I.e., could it come out as fast as it's gone in again?
Look, it's a good question, but there has been a big surge in ETF inflows. I know that Bitcoin ETFs haven't been trading for that long, but the day after the election, when it was more certain that Trump was going to take this next presidency, we saw the biggest inflow ever into Bitcoin and crypto ETFs broadly. On a wider view, it's been up 90% in the last 12 months, and since the lows of 2022 of the FTX collapse, Bitcoin is itself up nearly 400%. So a bit of a big about turn when it comes to the cryptocurrency landscape.
It's interesting, actually. I just want to take it. Andrea's still here, so I'm just going to ask her this question. Bitcoin was a big driver of luxury.
It was indeed, particularly in the US. Now, with China being in the doldrums, all the luxury brands are now looking to the US. And so the rise in Bitcoin could play into that strategy.
Be interesting. Maybe we're looking at a revival of the luxury trade off the back of the Bitcoin trade. Watches have been really hit recently, and I just wonder whether that would be... It was interesting, Richemont numbers were soft. Yeah. That was a China trade, but I do wonder whether or not, to Andrea's point, whether or not you get a pickup back in Bitcoin, whether or not there's a desire maybe to get back into the watch market as well.
Well, I think the part that stuck out to me on Valerie, she said that he wants everything to be made in the USA. Did we not just have this conversation with the EDP CEO as well, talking about just the cost of energy? Things energy, for Bitcoin to be mined in the USA, it requires cheap energy prices. I don't know if that's the direction.
Can you do AI? Can you do AI server farms and Bitcoin mining in the United States? Like, how much energy would that require?
So even the AI server farms require the electricity grid. I mean, this is I'm a Texan for our international audience. This is why the Texan grid is different than the rest of the country. It's a very wonky system, but it's for this reason that when there are outages off mining as one use case, that's where you run into this. You could even nerdier and say the utilities are actually powered by not oil, but by natural gas as well as a function. When oil prices get high, they switch to natural gas. We can nerd about
maybe a reason not to export as much gas.
Exactly.
Out of the United States to control that price.
So luxury, Bitcoin, natural gas, AI, we've covered it all.
Okay. We're going to talk politics next. We'll fold that into the mix as well. Maybe with a little bit of the auto sector folded in as well. We're going to be speaking to the Continental CFO. He is coming up. The company has posted third-quarter earnings. The beat on robust early demand for winter tyres in Europe. So people are buying their winter tyres. The overall picture seems to be not as bad as anticipated, despite a top-line downgrade. That seems to be the sense. We'll get an update in just a moment. That's next. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in now a GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Welcome back. You're watching the opening trade. We're 42 minutes into the session. As you can see, there's plenty of green on the screen. We are up pretty much across the board. London is underperforming. The only sector in negative territory this morning is the basic resources sector. It is down. It is followed closely, though, by the auto parts sector, which is only up by 0.5%, the second worst performing sector in Europe this morning. Construction is the leading sector. Let's talk about politics and how that's folding into the debate that we're having this morning around the table. Political turmoil very much continuing in Germany. We have seen the collapse of the ruling coalition. There were 3 traffic lights. There's only 2 traffic lights now. We're wondering when they're going to go out. Let's get an update on when we are going to get a general election in Germany. Ollie Crook joins us out of Berlin. Ollie, the latest.
Yeah, so listen, Guy, I mean, it's been a really sort of tumultuous couple of days here in Germany, and really what everyone is focused on right now is the mechanics of getting this federal election finally called. That's coming, as we'll remind people, more than a year early after the collapse of the Schulz government, after, as you mentioned, a third of the coalition is now no longer part of the coalition. So what Schulz needs to do is to call a sort of referendum on himself, a no-confidence vote, which he will presumably lose in order to get the election going. He wanted to have that election in March. Everyone said, no, actually, that's not going to be good enough. It needs to be sooner. So we're expecting that to happen, potentially the full federal election in January or February. But as you can see on the screen right there, the issue is perhaps not necessarily the mechanics. It is how a government will come together even after this vote. As you can see there, the 2 leading parties in Germany right now, the CDU, the conservatives led by Friedrich Merz, Merkel's traditional party in the #1 slot there, and then the AfD is #2. And even if these 2 parties would work together, which, by the way, they absolutely wouldn't, because no party in Germany has said that they will work with the AfD, that doesn't take you over the 50% line. So really a very sort of thorny political discussion ahead at a time when what Germany needs is coherent and cogent government.
Ollie, you've been covering, of course, the auto sector very, very closely, being based in Berlin. Connect the dots for us here. What does the political ramification or an early election mean for the auto sector?
Well, really, why this sort of government fell apart is fundamentally because of the economic situation of Germany and the real disagreements within this 3-party coalition about how to bring the German economy back, right? The SPD and the Greens have basically talked very openly for a while now about suspending the debt brake. And this is that constitutional debt brake that is in the German constitution. In order to change it legally, you need 2/3 of the parliament. And it basically says you cannot borrow in excess of 0.3% of GDP for debt. That is at the heart of the question here. here for the government and why it collapsed, because the finance minister refused to move on that. What I think is interesting is in his departing sort of speech at the government collapse, Olaf Scholz says he has really 4 priorities. And the first 2, 1 is to bring energy prices down for business, and 2, to do supportive measures for the auto sector, which, as we've been talking about for the last few months and really for the last year, is really at the center of the pain here for the German economy. Where things get even worse potentially for Germany and more complicated is the election in the United States. The United States is now Germany's biggest trading partner. U.S. overtook China this year to be the biggest trading partner with Germany. If you get 10% tariffs, that means potentially exports to the U.S. from Germany could fall 15%. For the auto sector, it's closer to 30%. So this is very consequential, and obviously everybody in the auto sector within Germany will be watching very closely for this next government and what policies they can bring forward to try to boost demand and support the companies themselves.
Well, exactly. Mert's saying that he's potentially open to a deal with Donald Trump. What could that look like? Could it involve the autos sector?
Yeah, so what's interesting here, Lizzie, is I talked to a lot of world leaders in Europe over the last couple of days in Budapest, and guess what? Everybody's open to doing deals with Donald Trump. The question is not that. The question is Donald Trump open to doing deals with these leaders? If you believe his rhetoric on the campaign trail, he says that the EU has taken more advantage of the United States than even some of the enemies of the U.S., and he's pointing to that sort of trade imbalance. So listen, I think that everyone is very cautiously optimistic here in Europe. We'll have to see.
All right, thank you. Bloomberg's Oliver Crook in Berlin, and we can stay in Germany, actually take the temperature of German manufacturing now with one of its key players. We can speak to another Olaf, and that is Olaf Schick, who is the CFO of Continental. They've reported their earnings this morning, and he joins us now from Hanover. Good morning, Olaf. I see your shares up 6.1% currently, despite you lowering your sales outlook this morning. And it seems to be because your results show that the requirements for the spin-off of your autos unit do appear to be fulfilled already. You've penciled a date of the end of 2025 for this spin-off to happen. I'm wondering now, could you bring forward that date?
Thank you. Good morning, and thank you for having me. Yes, we are actually very happy about our earnings in Q3 2024. We showed improved earnings year on year, but also in comparison to the first 2 quarters. Yeah? And that is driven by automotive results, tires results in particular. We see the success of our restructuring measures, of our cost reduction, of our R&D efficiency. We do see also that our tires business in Europe and Asia Pacific is performing well. We see a good start of our winter tires sales season. We are also increasing capacity in Asia Pacific and are ramping up our tires production capacity. Now, having said that, and with regard to your question on the spin-off, we're still in the detail analysis. We're making good progress. We plan to conclude the detailed analysis within Q4. We're working very hard around the clock on that. We're preparing in parallel the spin-off already. For us, it is important in the new structure, right, to have a capital market ready listed automotive unit, but also tires and ContiTech will be able to create more value in the new setup. So we are making good progress, and we are targeting the second half of 2025. Everything else, we need to wait until we conclude our detailed analysis. But most important for the spin-off and for everything we're doing is solid operational performance, and that we are on the right track, we can see in our disclosure of the Q3 results, which we made today.
Okay, so second half of 2025, not necessarily the end. I wonder, have you already talked to investors about the spin-off? And if so, what are they asking you? What do they want to know?
I think most important for investors is whether we are reliable, what is the capital structure. And here I can say, and we are saying, we will provide automotive with a very solid balance sheet on the one side. On the other side, Continental, after the spin, will be at least investment grade. And then, of course, again, important for investors and for us is to make progress step by step and to work hard on operational performance.
Olaf, it's Creedy in London. Walk us through a little bit of that operational performance here, especially given some of the earnings that are coming out, that weakness in your auto unit, although perhaps not necessarily what the stock market is responding to this morning. I'm curious how much of that weakness actually means that you have to change maybe your pricing strategy. How are you thinking about that?
Well, if you look at the performance of our automotive business, we can see three factors. First, we're making progress in our pricing negotiations with our customers. We concluded already 90% of our pricing in the third quarter, and the remaining gap we will conclude within the fourth quarter. Second, and that is maybe most important, we are making progress on reducing our cost basis. If you look, we made progress on reduction, in particular on the administrative side and on the RD side, but we reduced headcount by the end of the third quarter by 4,500. That is 3,000 on the administrative side and roughly 1,500 on the RD side. That means we have already achieved savings of 100 million euro by the end of Q3, and we are targeting 200 million euro savings on the administrative side by the year end. And starting 2025, we will lower the cost base by 400 million euro. I think that is important because we need to tackle the cost side while we see still very weak markets and very weak automobile production, particularly Q3. However, some progress we are seeing in the fourth quarter where production is picking up.
Olaf, that's very much catering to, of course, a European consumer. I'm curious about the read-through from the Asia weakness as well. Is your strategy then changing then? You talk a little bit about that operational performance. Talk to us about your strategy when it comes to Asia in particular.
Well, for Asia, if you look, here I would like to talk about our tires sector. Our tires sector posted a good result in the third quarter, and we are on track to fulfill our full year targets. And this is driven on the one hand by good European business, on the other hand by the business in Asia Pacific. I think we are doing well in comparison to our competitors in Asia Pacific. We are ramping up tires production capacity in Asia, in Thailand. We are investing 300 million euro in that facility, and we are providing in APAC the top 5 electric vehicle producers with our tires. So that is another proof point that we are implementing the right strategy.
Olaf, good morning. It's Guy. Do you think the Chancellor should wait, or do you think he should call an early election? What is the point in waiting? What would your advice be to Olaf Scholz right now?
There are many challenges currently in Germany regarding the economic situation. We have huge challenges on the labor cost side, on the energy cost side. Bureaucracy costs are too high, and our corporate income taxes are not competitive, right? So there are a lot of challenges. What we need now is, as soon as possible, so the faster, the better, a stable political situation with defining a clear target picture for the economy that is missing. So if we need soon a new government, the proposals by the industry are on the table. We are supporting them. But on the other hand, we as a company also need to take our right decisions, implement the right strategy, do a portfolio review, do cost reduction and work on implementation. So we are supporting, but yes, we need soon stable political conditions for Germany.
Okay. You mentioned corporate taxation there. Would your advice be to Friedrich Merz that he should lower taxes to around 25% corporate taxes? That certainly seems to be on the table at the moment. I'm assuming that you would welcome that. Would that be a good thing for Germany? Would that be a good thing for Continental? How big an impact could it have?
Absolutely. We need competitive corporate income taxes. We need competitive energy prices. We need investment into infrastructure. We need positive momentum here in Germany So we're looking forward. We see this crisis as a chance, as an opportunity for Germany, and the industry, again, has made concrete proposals that are on the table, and lowering income tax for corporates for sure is one of them.
Olaf, great to catch up. Thank you very much indeed. The stock higher this morning. Olaf Schick, the Continental CFO, joining us from Hanover. A pretty clear message. Get on with it. And the new government's lower taxes.
And he hasn't even talked necessarily about the effects of, say, the EV tariffs as well. We're getting a headline crossing the terminal as well that the EU actually is trying to have those conversations with Beijing, but to very, very little success.
It's going to be really interesting to see how Beijing responds. Is it going to penalize Italy at the expense of Germany? Does Germany get a better deal out of China? Is China trying to divide and rule maybe on the EV story here in Europe?
Well, as we await those answers, we've got a big week coming up. We've got US CPI coming on Wednesday. We've got the Mansion House address on Thursday from the Chancellor Rachel Reeves. We'll hear from Andrew Bailey, the Bank of England governor, amid lots of data out of the UK. Jobs tomorrow, GDP on Friday. And, of course, we'll hear from Fed Chair Jay Powell as well on Thursday, amid lots of other Fed speak now that we're out of the blackout period. So plenty to monitor this week.
Markets, in the meantime, on an absolute tear. You are seeing Eurostoxx 50 higher by about 1% and counting. The DAX higher by 1.2%. A lot of doom and gloom when we started this show. If you looked at the markets, you never would have guessed. Of course, we'll have that and more coverage. You have to stick with us for an interview with IBM Vice Chairman Gary Cohn. He'll be joining at about 1 p.m. UK time. It's an interview you do not want to miss. When it comes to the technology story, I'm sure a little bit of politics and geopolitics will make its way in there. Stick with us. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bitcoin tops $80,000 on optimism about a crypto-friendly White House, while European stocks rise, resuming Friday's positive tone on Wall Street. The German Chancellor Olaf Scholz says he's open to a parliamentary confidence vote by Christmas, potentially speeding up the country's early election to February. Plus, the Washington Post says Donald Trump has warned Russia's Vladimir Putin against escalating the war in Ukraine. And coming up, we're joined by David Rubenstein, Carlyle Group co-founder and co-chairman, to discuss what a Trump presidency means for the economy. That's in the next couple of minutes. Now, if you look at equities overall, they seem to actually still like and enjoy the fact that Trump has been elected president. So we're also seeing a lift on European stocks. You can see 1% S&P futures gaining 0.3%. I think what we're now trying to figure out is how President Trump, come January 21st, builds his cabinet, but also what his priorities are. That could include tariffs. Euro dollar 106.88, and you can see Bitcoin over $81,000. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So let's get more on the markets with Anika Gupta, Director of Macroeconomics Research at WisdomTree. Anika, thank you for joining us. There's a lot going on. Equities, like actually that Donald Trump has been elected, a lot more question marks when it comes to the bond market because they worry about inflation, and then crypto, frankly, on a tear.
Absolutely. It's been quite a volatile week. U.S. equities clearly standing out as the outperformer when you look at it versus versus Europe, Japan, China, and the rest of the world. Clearly, with Trump, coming into power, you are seeing that advantage towards U.S. markets, given tariff uncertainty, deregulation, reduction of taxes, which is likely to benefit the U.S. economy, as opposed to the rest of the world. So I think that seems to be what's, front and center at play right now.
I mean, when you look at some of the asset classes, I know bonds have been all over the place, and then you have warnings from BlackRock, but also JP Morgan saying, look, it's not done yet, as they're trying to figure out exactly what kind of inflation brings. Are we going to see more volatility, full stop?
We are going to see volatility, but I think it's important to, reflect a bit on the Fed meeting that we've had. We saw the FOMC clearly bring out the fact that they're not really ready to slow down on their pace of rate reductions. If you look at, the unemployment rate, we've had some success. The unemployment rate has stayed quite low, but broader measures of labor market tightening are beginning to decline. And so that still puts the Fed on course to reduce interest rates. We're still 175 basis points above the median neutral rate. And that just tells us we still are on pace for 3 more consecutive cuts for December, Jan, and Feb, followed by June and September, which will bring us down to about 3.25% to 3.5%.
Anika, we have so many question marks, of course, on the cabinet, who's Treasury Secretary. Do you assume that actually over the next 4 years, the U.S. will do better than it is now, which is frankly already very well? There's a lot of jealousy in Europe about some of the growth rates that the U.S. has right now.
So there's a bit of conundrum, Francine, because obviously, if you look at what Trump's mandate is, it is trying to lower inflation, produce real growth, and at the same time, allow for more allow for more excessive fiscal policy. So something will have to give, and I think inflation is what would have to give. And that's why we still see, if you want to still get that growth up, you want to get that fiscal policy more expansionary, inflation will have to be structurally higher going forward. And I think that's where a lot of that, volatility will be emanating from.
So does it also mean, there's volatility, but if you're Mexico, if you're Germany with the spat with Donald Trump, you're feeling quite a lot of heat right now, and he hasn't even started. So what does it mean for those markets?
Absolutely. These economies are facing a lot more volatility and a lot more uncertainty, especially in Germany now that we have, the high probability of the snap elections being called. It's, everyone's looking forward to what is the direction ahead. Polls are indicating that now we have the CDU, CSU, and FDP likely to form the next coalition. And that just tells us, on the positive side, we are likely to see a bit of loosening of fiscal policy. So we're likely to see further strength in supply and demand now that we get an increase in public investment. We're also likely to see lowering of business taxes alongside, a bit more of a control policy on immigration. And which is one of the reasons why we're seeing that positive reaction on the German markets, as opposed to a day when there is quite a bit of uncertainty from the top headlines.
Bitcoin, forget Bitcoin. It's all Dogecoin. It's all, again. I mean, it's not. Is this going to be the big moment for any of these coins because of deregulation?
I think so. I think Trump seems very pro, digital assets. He's embracing it in a very large way, and that just tends to provide a very strong tailwind towards digital currencies on the whole.
Thank you so much for joining us. Anika Gupta, their Director of Macroeconomic Research at Wisdom Tree. We'll have plenty more, of course, on the Trump trade shortly. Coming up, private equity, the U.S. economy, and what Donald Trump in the White House means for U.S. business. We'll be joined by David Rubenstein, the Carlyle Group co-founder and co-chairman. He also has a great new episode on baseball, so we'll talk a bit of baseball, too. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Well, Donald Trump's return to the White House is set to reshape the U.S. economy. The president-elect has promised an escalation of tariffs on all American imports and the biggest mass deportation of migrants in history. He also wants a say in the Federal Reserve policy. So what does this all mean for business deregulation, banks, and private equity? Well, I'm delighted to be joined by David Rubenstein, the Carlyle Group co-founder and co-chairman. He's also, of course, you see him on Bloomberg, the host of the David Rubenstein Show and Bloomberg Wealth. David, so good to speak to you the week after Donald Trump got elected with actually a sizable majority. What will he use it for? What does making America great again, America first, mean for the rest of the world?
Well, clearly he has a mandate that very few presidents have had in recent decades. He not only won the presidency fairly decisively, but he won the Senate or helped the Senate go Republican. It looks like the House will go Republican as well. So he's going to have a mandate to be able to do what he wants. What presidents who've had large mandates have done, like FDR in 1932 or 33, is do a lot of things early. Because your power usually erodes after a period of time. People get tired of your policies, or people who are enemies of your competitors don't like what you're doing. They can gear up and oppose you. But in the beginning, they may not be ready to do that. So I think he'll do a lot of things by executive order in the beginning, a lot of things that don't require Congress to approve it. And he's now trying to get his Senate confirmed people done really quickly, which is to say, get everybody in office right away. Normally, we've seen people take months before they get confirmed, and I think he's going to try to get them all ready at the beginning of the administration.
The markets like this, are they missing something? If he puts loyalists in the cabinet, is there too much danger of like inflation going up and actually businesses being caught in the crossfires?
Well, you never know. Inflation seems to be coming down. I think it's probably around 3% annualized right now, and that's reasonable, but the Fed would like to go down to 2% or see 2% within range. And I think the inflation is coming down. I think the Fed is going to be lowering interest rates, and they may do it one more time this year, but I don't think the Fed is going to have as many rate cuts as was expected just 6 months ago. I think people realize the economy is probably heating up a little bit, and the rate cuts probably wouldn't be helpful right now.
When you look at, the U.S. economy from the U.K., from France and Italy, you think it's the greatest economy on earth right now. I mean, it's firing on all cylinders. What happens next? I mean, we're talking about P and deals being made under Trump. I mean, they've been happening already.
The economy is in pretty good shape in the United States, but President Trump thinks he can do even better, and the economy can do better, which is to say have higher growth. Yeah. The best way out of our deficit and debt problems in the United States is to have 3% plus growth for quite some time in the future. That's the only way we're going to really deal with our debt and deficit problems. And also, I think President Trump would probably like, though I can't speak for him, but I suspect he would like to have more mergers and acquisitions and not have so much blockage as occurred in the previous administration, rightly or wrongly. So I would say he will probably be more of a free market person than his predecessor.
But does the U.S. not need a strong global economy to operate in?
Yes, of course. A strong global economy helps the United States always. And the United States is really fueling the global economy right now. I think we haven't seen all the impact of what the United States is doing, but I think Europe is doing things to try to catch up the United States. Since COVID, the United States has really zoomed past the rest of the world economically, and I think others are seeing what we've done, and I think they're trying to catch up with us, including China as well. China just announced a large stimulus package because they want their economy to grow at something close to the rate we're doing.
David, do you know Donald Trump? Do you think he wants a deal at any cost? Will he do a deal with NATO? Will he do a deal with China?
A good deal maker is somebody that wants to get a deal done, but also recognizes both sides have to get something out of it. So I don't think he wants a deal at any cost. But remember, he has the benefit of having been a president for 4 years, and he now has that experience. And when you're a second-term president, after the first term, there's no interim period of time, you don't have a chance to sit back and reflect on what you could do better than what you did in the first term. Now he's had a chance for 4 years to think about what he could do better. He said that he can get more experienced people. He knows how to pick people better than he did before, perhaps. That's what he said. And so I think he'll have very experienced people in the cabinet, people that are very, very loyal to him, which is a very important thing for him. So I think he's going to reach out to Europe without any preconceptions about what he wants. He's obviously going to reach out to China without any preconceptions, though I don't speak for him. That's my sense of what he's going to do.
But so is he dogmatic? Is this his legacy? Are we going to see the Donald Trump legacy in the next 4 years, or is it something else?
Presidents always begin to think about their legacy toward the end of their last term in office, and I suspect he will think about it. But right now, he wants to get things done. He made a lot of commitments to the American people in the campaign, and I think he wants to honor them, like all candidates do. And I think he really is serious about honoring these commitments. He said a lot of specific things he'd like to get done. Tariffs are a good example, and I suspect he'll follow through on it.
Private equity will go. What does it mean for private equity in the U.S.?
Well, private equity has been, I would say, stalled a bit in the last couple of years. There haven't been a lot of deals, haven't been a lot of IPOs. I think it's coming back now as interest rates go down, and I think the regulatory environment will be much better for private equity. So I think private equity will begin to see, as private credit has already seen, a pretty good increase in investor interest.
Europe private equity has been very lackluster. Does it continue? And why, is it valuation problems or just financing?
The problem has been the interest rates have been high, and also people worried about a recession. So people who are buyers were afraid if they went in and paid high interest rates and they head into a recession, they look silly. Right. And sometimes the sellers have said the prices that they thought they were going to get are not as high as they are now getting. Therefore, they want to hold on longer. So there's been a gap of maybe 10 to 15%, maybe even 20% between buyers and sellers. I think that's going to depress a bit as now we begin to see we're not going into recession and as interest rates come down.
Yeah, but Europe is in a tricky situation. Again, you don't know what happens with Ukraine. You don't really know what happens with gas price. You don't really know what happens with Donald Trump and tariffs.
Nobody knows yet, but I do think there's a sense in the business world that something good is going to be coming forward and that there's more of a pro-business environment going forward, rightly or wrongly. And I think a lot of European leaders are now beginning to say we have to see what happened in the United States and follow some of the same things. Now, everything in the United States is not going to be perfect. There'll be some mistakes made in the economy, but generally I think people are very bullish on the economy, which is reflected in the stock market. And I think private equity people are probably as giddy as I've seen them in years.
It's true. What's the right way for a European leader to deal with Donald Trump? If you don't want tariffs, but you're not 100% aligned with some of the visions, even with crypto, how do you deal with a very strong personality that wants to get his way?
I think meeting with him one-on-one is usually a good thing to do. I think recognizing the political constraints that he's under, which is to say he made certain commitments, he's likely to honor them. But I think not treating him like somebody who doesn't know what he's doing or somebody who's not as intelligent as they are is a good idea. In other words, I think sometimes European leaders didn't take him as seriously as they should have, and when he says something, he really means it. So I think they'll approach him with a different, I think, sense of respect than they probably did last time around.
And for his cabinet, do you think it's loyalists but business people? So I mean, how does that skew compared to the first time around?
Well, the first time around, President Trump said he wasn't as experienced in picking people, and he picked some people he felt weren't as loyal as he would have preferred. This time he's picking people he says are going to be much more loyal, and people he's known for a longer period of time. Remember, when he was first elected, he'd never been in government before. He didn't really know all the people who were qualified to be in government. Now he's been around for 8 years, and now I think he feels much more prepared to be president of the United States in the sense of having experienced people around him who know what to do.
But are loyalists dangerous if you're going in the wrong direction because there's no one else to say, Mr. President, wait, you're wrong on this?
Well, there's a balance between telling a president you're wrong and doing it in an effective way sometimes. So his chief of staff is somebody that's gotten along with him for quite some time, and she's told him from time to time, you know, you're not right, but you have to do it in a certain way. Telling him he doesn't know what he's talking about and what he's doing is a big mistake is probably not the best way to approach it, be my guess. You have to use some discretion. But he's a smart person, and he'll get along well with his new advisors. And I think the Europeans and the Asians, leaders around the world, recognize him with much greater respect than they did before. They thought first time he was a bit of a fluke. This time they recognize he represents a trend, and it's not just a fluke.
What would you do if you were President Xi right now of China? Would you call him up and invite him to a military parade?
I would try to see if I could meet him as soon as possible. Obviously, inviting him to China is one thing, but offering to come over and meet in the United States is another thing, and they can meet halfway between, of course. But I think having a meeting sooner rather than later is a good policy.
How's journalism? I mean, you ask great questions on your shows, and we're about to talk to, there's a new episode coming out on baseball.
Yes, that's correct.
Fun?
Well, baseball is the American pastime, and historically, now, of course, people think football and basketball have replaced baseball, but I'm a baseball owner, I should disclose, and I had a chance to interview Cal Ripken, who holds the record of playing the most consecutive games in the history of baseball, 2,632 games in a row, 17 years without missing a game. You know, it's pretty good.
Yeah, I know you're talking about, of course, how he did that, so we're going to talk about that next. David Rubenstein stays with us. We'll talk about baseball. That's the first on the pulse, but it's also big business. This is Bloomberg. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
I never liked the idea because you were a small market team, you couldn't compete. Because I think competition is in your knowledge. You know, you're drafting, you get to draft, you get to sign players, you get to develop players. You know, that's not all free agency that's happening. But if you're a big market team and you make a mistake in judgment on a player, you can throw more money at your mistakes. When you're a smaller market team, you have to be better at your baseball decisions.
Well, that was Cal Ripken, Major League Baseball Hall of Famer. You can get more of that conversation on this Wednesday's episode of The David Rubenstein Show on Bloomberg TV and online. Well, still with us, Carlyle Group co-founder and co-chairman David Rubenstein. David, I'm sure you had a lot of fun, right, speaking to the legend that is Cal Ripken Jr.
Yes, so people don't realize what he did. There had been a record of playing in 2,130 games in a row set by Lou Gehrig, a very famous baseball player who had to end it because he came down with ALS. And for some 30 years after that, nobody came even close to touching that record. But Cal Ripken played 17 years in a row without missing a game and barely missed an inning in 17 years. And, you know, as you know, all of us who work generally get some illness at some point in time. But he was an athlete and went to work every single day for 17 years. And plus, he was actually really good at this. He was the most valuable player twice. He won the World Series for the Orioles, so he's quite an impressive player.
I mean, he's incredible, but how did he achieve that? Because a lot of people will look at that and say, well, look, I'm running a company or I'm doing this, and sometimes it's hard to keep going.
He basically toughed it out. In other words, he had illnesses like all of us do, but he just played through them. And sometimes we come to work and we're not feeling great, but we just go through it. And, you know, he's an athlete. He just went through it. Sometimes he was playing for his father, which was his manager, and he didn't want to tell his father, I'm not feeling good today, so he would just play through it.
David, I mean, you know, Cal Ripken is also now one of your co-owners of the Baltimore Orioles. Are you bringing the game to Europe? Like, what comes next for baseball?
Well, baseball is different than football and basketball. It's not quite as global a sport, but I think we're trying to make it more global. It is global in the sense that Japan has a gigantic following for baseball. Taiwan does, Korea does, and Latin America and Central America, there are a lot of baseball players there. Europe, it's not been as popular, but we hope to be able to bring baseball to Europe and make it more popular than it has been.
This is everywhere, or you start with the UK, a bit like American football started here?
Well, I think the UK would be a good place to start, and there have been some games over here, and I think there'll be more in the future, yes.
What are his hopes for the team?
Well, everybody wants to win a World Series. We call it the World Series, even though it's really the U.S. Series. We call it the World Series. But everybody wants to win a World Series. We haven't won one in Baltimore since 1983. It's a long time ago. So I hope as an owner I can help get the team to a point where they can win a World Series. Now, the owner isn't really the person that makes the most important decisions. That's the manager, the general manager. So I'm, you know, sitting there kind of rooting them on and helping a little bit. But, you know, it's kind of difficult being an owner because you can't go on the field and tell these players what to do because you don't really have the expertise. So it's not like running a private equity deal where I can go and tell people this is what they should do. But it's fun and it takes a lot of time.
I mean, what's the hardest? I guess it's building a team that's not necessarily all the best players, but players that work well together.
Well, it's a team sport. And so no one player, no matter how great he is, can make you a World Series championship. But there's no doubt that if you have one or two really great players and a couple pretty good players, you can probably win a World Series. And right now, the World Series champion this year is the LA Dodgers. They had a great player, Mr. Ohtani, who is very famous because he came from Japan and he both pitches and he also hits, which is very unique.
So you say, of course, you can't be on the pitch, but what's your number one advice to the players if they ask you?
Listen to what the owner says.
The second one?
Play as hard as you can. Don't focus on anything other than teamwork and winning, and everything is a good teamwork kind of enterprise. Baseball is an individual sport, but it's really a team sport, and you've got to work with your teammates to make this thing work.
I mean, do you need? There's a lot of questions here in the UK about soccer and private equity coming in here. Is money a good thing because it actually expands it, or are there caveats actually on how much money you should spend?
Well, there's all limits in what money can do. You can't just spend an enormous amount of money and automatically win a championship. Yeah. But there's no doubt that football here, or soccer or football, is very popular in the United States as well. And people watch it in the United States, not quite with the passion that people have it here. And a lot of American money has come over here and bought teams and money from other parts of the world. And I think you'll continue to see that.
David, thank you so much. What fun to have you in the London studio. David Rubenstein, Carlyle Group co-founder and host of the David Rubenstein Show. The great new episode out on Wednesday. It's the 10th season of the David Rubenstein Show.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Bitcoin tops $80,000 on optimism about a crypto-friendly White House, while European stocks rise, resuming Friday's positive tone on Wall Street. The German Chancellor Olaf Scholz says he's open to a parliamentary confidence vote by Christmas, potentially speeding up the country's early election to February. Plus, President-elect Donald Trump prepares to meet with President Joe Biden this week to discuss the transfer of power. We'll explore the outlook for foreign policy. Now, tech entrepreneur Dean Forbes has recently topped JP Morgan's 2025 power list of influential Black Britons. Forterro, the software solutions company he founded in 2012, is now valued at 2 billion euros. Now, he's also a partner at Quarton Capital and has helped the firm raise 1 billion euro fund. Well, Dean Forbes joins us now. Dean, thank you so much for joining us. I mean, there's a lot to talk about because you're in software, because it's a unicorn, because there's, a lot going on in terms of access to capital. When you look at the landscape in the UK, but also abroad, what are you most optimistic about and what frustrates you the most?
Well, we've never really seen a time like this. I mean, entrepreneurs and leaders, we've learned how to run our businesses in downturns. We've learned how to run our businesses in, up markets. But there's so much uncertainty in the market at the moment, it's hard to make long-term strategic decisions and long-term investments. And that's been really frustrating. Nothing seems to be moving. Everything seems to be clogged up and just taking a long time to unwind. Very frustrating.
But this is what, in terms of financing, in terms of access to capital, or is it, what AI means for your business, even what tariffs could mean for Europe?
I think it's a combination for us in tech, the emergence of cybersecurity. So cybersecurity and threats to businesses like ours from a cyber perspective are at an all-time high. We're seeing 1,000% more attempted attacks per week than we were seeing 2 years ago. And then there's the debt markets, just borrowing money that we use to invest in our businesses for the long term. The interest rates have been so high that it's difficult to sustain that for a long period of time.
Dean, when it comes to these cybersecurity attacks, is it state organized? Is it individuals? And actually, do the nature of these change, which means that you need to also, I guess, be more nimble or clever in how to stop them?
Well, we're a cloud-oriented company, so our customers trust us with their data. They trust us with their information. We're the backbone system that our customers use. So if we were to become, victims of a cyber attack and their data suddenly became out of their reach for that reason, I mean, it's really, really crippling. The rate at which these attacks are evolving is just incredible, right? The defense mechanisms we're using today are very, very different to what we were using 1 year ago, and they're going to be very different again in a year's time.
In terms of sizing for Forterro, how much bigger do you think you can be, and in what time frame?
Well, despite the very challenging economy, we've doubled in size between 2022 and 2024, and our plan is to double again from 2 billion in valuation to 4 billion by 2026. So our rate of growth hasn't been adversely affected by this economic pressure, but the debt and the balance sheet looks quite different to what we expected it would.
So do you need interest rates to go down? And again, we're in a bit of a tricky situation because we don't really quite know what inflation does. Again, nothing's in a straight line.
Right. Well, for sure, we'd love interest rates to come down, right? That puts cash back into the organization. That allows us to reduce our debt balance. That allows us to invest. I think if we can't have interest rates coming down, which they're not predicted to come down meaningfully anytime soon, we just want stability. Let's have a constant set of stable interest rates for a good period of time.
Do you think that that's coming? Or again, are there a lot of uncertainties? We also talk about deregulation possibly in the U.S. and how that impacts Europe, and so how it could adversely impact actually Forterro.
Well, we expect interest rates to come down, and we've seen a small move recently, and there's good predictions that we'll see another small downward adjustment before the year is out, which is absolutely welcomed. And then, as I said, beyond that, a good sustained period of continuity and predictability will be absolutely welcomed.
Dean, you have an incredible life story. I mean, you've faced adversity, overcome adversity, gotten to where you have, and I guess you take probably nothing for granted. There are a lot of people watching us that are either going through tough times or will be going through tough times or find it difficult to be in charge of a big organization. Are there life lessons that you've learned along the way?
Oh, for sure. I mean, my number one advantage, and I always say this often, is that having lived with nothing for such a long period of time, I don't fear having little or nothing in the same way as other people who maybe had a more privileged upbringing than I did do. So that really has turned into a bit of a superpower for me. But far be it from me to tell people going through these very difficult times that it's easy or they can just hope their way through. I mean, these are very, very difficult economic times that we're all trying to make our way through.
But does that change your risk perception?
It doesn't change my risk perception because my business is one that's very, very predictable. Our customers subscribe to us on long-term contracts, and it's normally only insolvency that changes that during those contractual periods. So we have a very downside-protected business model. But then you see things like the high street, you see the retail sector, you see hospitality, low-margin businesses, extremely volatile. Market conditions and weather conditions can adversely affect those businesses. So that's a very, very different business to bring through an economic situation like the one we're in.
I guess the disruption, everything's being disrupted at the moment. So when do you know if your business idea or your company is not where you need to be? How do you change it to something that's, if not the zeitgeist, certainly where people want to invest and grow in?
Yeah, I'm a big believer in long-term planning, right? Long-term planning that's broken down into years and then quarters, because there's a lot of talk about pivoting businesses quickly, especially in the tech sector. But I think sometimes you can, over-index on pivoting too many times. Often there's a lot to be gained by just being consistent, playing out the plan, learning from mistakes, and making small adjustments as you go.
You're in a number of countries. Do you worry about Germany as opposed to the UK more because of political turmoil, but also it seems to be in the sights of the president-elect?
Yeah, well, Germany is is our biggest, our biggest market. We have the highest number of customers there, and it's been a great market for us for many years. The automotive sector has been such a strong sector for the German economy, but we're seeing that sector change now. We're seeing the political situation affecting the economy. Now, all of that being said, I think strong economies continue to be strong economies over time. We expect Germany to come back. We're in the process of doing a large acquisition there, so it's a market that's going through its turbulence at the moment, but we expect it to come back.
But does it mean that you have to pivot to another stronger country or economy to make up for, I guess, volatility in the coming years?
In the short term, you see a bit of downward pressure in one market. Having a business like ours that's distributed across so many different countries and so many different subsectors does allow you to kind of reorient focus for a period of time. But will we be in Germany in 5 or 10 years' time? Well, absolutely. And will the economy be back by then? More than likely.
Well, we hope so. Dean, thank you so much. Dean Forbes, Fortero Chief Executive and Courton Capital Partner, stays with us, and we'll talk a little bit more about access to capital. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to The Pulse, everyone. Now still with us, Dean Forbes, Chief Executive at Forterro and partner at Corton Capital. Dean, thank you so much for joining us. First of all, you've made it to the power list, so congratulations on that. Are you concerned that there's just not enough access of capital to black founders?
Oh, absolutely. I mean, less than 1% of VC money goes to black and brown founders, and it's a similar statistic for borrowing from major high street banks for businesses. So, that's a known problem. The statistics tell us that that's a problem, and that's something that we absolutely should think about addressing.
But we thought it'd get better, and actually it's not. I was looking at the figures. It's absolutely not getting better. A lot of the, diversity and inclusion things that bank had put in place were also being rolled back.
Well, it's a real grassroots problem, right? And I think a lot of banks and financial institutions were well-intended with good measures, well-intended measures to try to change that picture. But then we have to think about, why that happens. Why do black founders need that money? How do they go about sourcing that money? How are they educated about how to, get that money, get that investment, and then how to manage it once they do get it? So it's not just about banks being well-intended and trying to distribute that capital. It's about those founders being ready to pitch for that capital and then put it to good use if they're successful.
So what's the right way, again, to be thinking of this? If you're a founder right now and you say, actually, it's much harder for me to access capital, where do you turn to? Who do you go to?
Well, there are a bunch of firms in the UK now and across Europe and in the US who are focusing on addressing this disparity in the way that black founders are funded. You have organizations like Cornerstone, like Blackseed, here in the UK, who are raising big funds and dedicating them to black and brown founders. So that's one thing. We need more firms like those. We need more of the big private equity and VC houses supporting those types of firms. And then we need other organizations who are educating, mentoring, and supporting those founders to help them get access to that capital and then put it to good use. It's only once those founders put it to good use that it will attract more capital from VCs and PE firms alike.
Yeah, I mean, good use, but Forterro is really a case in point, right? It's a unicorn. It's worth $2 billion. Does that make a difference in how I guess banks give access or money, or are you treated differently?
Well, I'm not treated differently now because at this scale, kind of the color situation and this whole topic is no longer a point. But for those founders who are just starting out much earlier on their journey, I would say it's that lack of familiarity between the founder and the institution that often leads to them not being funded. How I help is through FFG, where we do a lot of support for young entrepreneurs, black entrepreneurs, to help them prepare themselves to go and get this money from those organizations willing to invest.
Is this more of a UK problem, or is it really across the board in all countries?
The statistics between the UK and the US, which are probably two of the biggest tech markets with dense black entrepreneur populations, the statistics are very, very similar. So it's not only a UK problem.
Dean, when you look at technology, I mean, we talk again about AI. Is there too much focus on AI and not enough about the backbone, the cloud, the important stuff that's maybe less sexy, but that's really needed to make sure that everything is safe?
Well, we're seeing a bit of a shift in the way people think about AI, right? We're seeing kind of the gimmicky type of AI, which is aimed at, routine tasks, mundane tasks, which is cool and can be helpful to an individual's productivity. But there's also an emerging focus in AI, which is being aimed at system of record, which is being aimed at, production line software and the types of software and technology that is actually producing the output of the organization. And I think that's much more fascinating, far less fashionable, and likely to deliver much greater returns in the long term.
And again, are the incubators in these kind of businesses, how important are they? Does the Labour government, on top of what needs to be done to make sure that actually this continues in the way for the UK, or otherwise business will go elsewhere in Eastern Europe?
Well, we need to see kind of more subsidies for UK businesses, especially tech businesses who are making big investments in AI, because we're early in doing that. And what we learn and the mistakes that we make and the triumphs that we have will inform the rest of the sector to accelerate even faster. So I think that could be an area that government, could look at to help and encourage us to continue to spend money investing in AI.
Dean, thank you so much for joining us today. That was Dean Forbes, Forterro Chief Executive and Corton Capital Partner. Now on to geopolitical news. And the Kremlin has denied a Washington Post report that President Vladimir Putin held a phone conversation with U.S. President-elect Donald Trump. Well, Rosalind Matheson's Bloomberg's EMEA News Director joins us. Ross, thank you so much for joining us. I mean, the fact that they're denying it is not great. Are they likely to speak at some point, or is it, a question mark?
Well, we know they've both actually opened the door to having this conversation. We saw that Vladimir Putin congratulated Donald Trump late last week on his election win and said he was willing to talk. Donald Trump said they may talk. I mean, he needs to tread a little bit carefully there, but it's possible they do actually speak before Donald Trump's inauguration. Of course, he's already spoken with the Ukrainian president since his election win and a number of other leaders around the world. The question is there an incentive for both of them to talk before Donald Trump takes office? Certainly, there may be. There seems to be a sense that Vladimir Putin's willing to hear what Donald Trump has to say about the situation in Ukraine and the possibility of getting towards talks in that conflict. And would that be advantageous for Vladimir Putin? Quite possibly. So certainly the door is open there, but for now at least the Kremlin's denying that conversation happened.
So, Rose, do we know, in terms of priorities, and this is kind of what we're trying to figure out, when President Trump goes into the White House, does he go for tariffs? Does he try to get peace actually in Ukraine? And so do we know who's influencing him? Is it Elon Musk, and how quickly he wants to get something done?
Well, very interesting to see in one of the conversations that Donald Trump had with Volodymyr Zelensky, that Elon Musk got on the phone. He seems to have passed the phone over and they had a chat as well. And we know that Elon Musk has a strong interest in Ukraine. Obviously he's been supporting Ukraine through Starlink, but he's also got a business sense there as a result too, because of Starlink. And so he's got a lot possibly that he's telling Donald Trump about what he thinks about Ukraine. We do know that Trump has said he will end the war quickly. Hasn't said how, but that's been something he's said a number of times now, and certainly he doesn't really seem to want this conflict to go on after he takes office, and he can claim a win. Even if he gets it to a frozen conflict in a way, just gets things to de-escalate, he'll call that a win. So he does seem to view this as a priority.
So militarily, what's going on? We also heard a couple of weeks ago about 10,000 North Korean troops at the border.
We know that Russia's bringing those towards the border to buffer their fighting. We know they're actually making further advances now in the east, the southeast particularly of Ukraine, which is that industrial heartland area. They're pressing further south in that push, and so they're really, escalating slightly at this point. We're seeing street-to-street fighting going on in some of these cities. That seems to be Vladimir Putin pressing the advantage in the minute, and a sense again that, we're going into a year where either way, financial support for Ukraine is going to decelerate, military support for Ukraine may also taper off, and where does that leave Ukraine? Possibly on the back foot, having to negotiate.
Ross, thank you so much. As always, Bloomberg's MEA News Director, Ross Matheson. Now, coming up, pressure mounts on Olaf Scholz. We'll bring you the latest as the German Chancellor also indicates he's open to an early election. That's next, and this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg. Well, French President Emmanuel Macron there and the British Prime Minister Keir Starmer on the Champs-Élysées for armistice ceremony. Now, Starmer is the first British leader to attend the ceremony since Winston Churchill back in 1944. Now, the Paris ceremony does, of course, echo these Franco-British commemoration 80 years ago when Allied troops liberated most of France's territory from Nazi occupation. That's according to Macron's office. We, of course, will follow this very closely to see some of the commemorations. Again, the British Prime Minister Keir Starmer joining the French President at a Paris ceremony marking the 106th anniversary of armistice today. Now, political turmoil continues in Germany after the collapse of the ruling coalition. Let's get more from Bloomberg's Oliver Crook. So, Ollie, what's the latest on this confidence vote?
Yeah, so Francine, just to kind of remind people on the mechanics here of the German sort of politics, which we're going to be hearing a lot about over the next couple of weeks. Basically, what Olaf Scholz needs to do now is call a no-confidence vote in himself, and once he has done that, they can sort of call the federal election, which we're reminding everybody is coming basically a year in advance after the government collapsed a couple last week, I should say. And now basically the question is all around the timing. What he was hoping to do was to call the no-confidence vote in January and then have the election in March. Everyone has pushed back against that, and that basically is going to have to come a lot sooner. That is the mechanics. Francine, the other problem we have is there is not a clear sort of path to a cogent government. As you can see from the polls right there, the CDU, run by Friedrich Merz, Merkel's traditional party, even if it were to combine with the AfD, of which there is 0% chance of happening because they said they wouldn't work with the far-right AfD, that still doesn't really even get you to 50% of the vote required to have a sort of a government here in Germany. So the question is, how are these polls going to shift over the next couple of weeks? And will they get to a point where actually only two parties can form a government, particularly coming after that sort of three-part coalition government that really at the end of the day was not able to keep it together and in a moment where Germany really needs that political stability and business stability for the sort of community of business that just want to have predictability at this point.
Ollie, why is Elon Musk picking a fight with Olaf Scholz?
Yeah, so this is really interesting, Francine. So we got to sort of of course, the outcome of the election, and really the first contact between any kind of Trump administration and Olaf Scholz was Trump tweeting, or I should say Musk tweeting, we should say at least in German, he did him that courtesy, was saying Olaf ist ein Narr, which means Olaf is a fool after the government collapsed. And this is really sort of was the first point of contact, right? We understand now that Olaf Scholz and President-elect Trump spoke on Sunday night, but it took a very long time, Francine, for that conversation to happen between Olaf Scholz and the President-elect of the United States. Generally speaking, an ally with the statue of Germany would have that call very sort of much earlier on. And for the government here and for the sort of political situation in Germany, they're looking over at the United States and they need some certainty on the tariffs, because if you get 10% tariffs across the board from German exports to the U.S., the U.S. is now Germany's biggest trading partner. That could have a huge impact on the German economy. It could reduce exports by about 15% to the U.S. and would even be worse for the auto sector, which we know already is in great turmoil. So there's a very high stakes here, Francine, going into what is already sort of thorny relationship.
Yeah, it certainly is. Ollie, thanks so much, Oliver Crook there in Berlin. Now, Bitcoin also hitting a new record, topping $81,000 following Donald Trump's presidential election win. Now, for more, we're joined by Bloomberg's Emily Nicole. Emily, thank you so much for joining us. Bitcoin's on a tear. Dogecoin is on a tear. I mean, there's, a lot is riding on a Trump presidency.
Yeah, I mean, traders are really optimistic about Bitcoin at the minute just because of what Trump has been saying over the last few months. It's been a very big overture from Trump towards the crypto industry as he was fighting to get elected. He's made several promises to the effect of, bolstering the crypto industry's chances, and Bitcoin, being the biggest asset of them all, is the one that is reaping the benefits right now.
Yeah, and there are also now lawmakers that are really pro-crypto. So what kind of, are we talking about deregulation? Like, how could the crypto world change in a Trump world?
Yeah, you're right. I mean, more than $180 million was spent by the crypto industry on trying to get those lawmakers elected. Among the things that Trump has promised is to fire SEC Chair Gary Gensler on day one. I mean, whether or not that comes to pass is kind of up in the air still at the minute, but Gary Gensler has been a very big enforcer against crypto in recent years. Other things that Trump wants to do is have all Bitcoins mined in the USA from now on. He wants to create a strategic reserve for Bitcoin in the US government. So there's a lot of changes that might be positive for crypto, but we'll see what happens exactly with regulation as well later on. So,
Emily, in terms of crypto, I mean, is it Bitcoin? Bitcoin's the biggest, but actually I think Doge was one that moved first the most in terms of percentage.
Yes, so a lot of the smaller coins are also outperforming Bitcoin at the minute. I mean, smaller tokens by nature can be more volatile, and so their swings can be larger. But for Doge in particular, it's a favorite cryptocurrency of Elon Musk, who is also tapped to be part of Trump's administration potentially in the next coming months. And so that was a big mover. We've also seen some of the DeFi tokens rise quite a lot because there are quite a few lawsuits or intentions to sue from the SEC against DeFi players at the moment, and so they're bolstering as well.
Emily, thank you so much. Emily Nicole there with everything you need to know on crypto. Up next, a Bloomberg Brief. Danny Berger, Manoj Krani in New York, and this is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning from our global headquarters here in New York. I'm Manish Cranny. You're welcome to Bloomberg Brief. Let's set your agenda. Risk on and powering through to new record highs. U.S. assets are emboldened as a Republican victory continues to boost risk appetite. Finish the job. Minneapolis Fed President Neel Kashkari says the path to 2% inflation is not done yet. And President-elect Donald Trump taps his former immigration chief, Tim Homan, as the border czar. A very good morning to you. There is an alpha to these U.S. assets again this morning. You're looking at putting in the 50th record high in U.S. equities last week. SPOs are up 4.7% on the week. And your small caps, they are driving ahead again this morning. You've got the best week since 2020 in there, up 8.6%. You're trading on a forward PE of 22.5. Is that rich? Is that rich for your blood? Right now, equity risk premium is in excess of the risk-free, and that is at the lowest level in 22 years. Roll it over. There will be a screech one day when these bond yields. We're closed on the cash, but what I wanted to show to you is what happened in the 2s, 10s last week. It is Veterans Day. The cash market is closed. What you've got at the bottom of your screen are futures, U.S. bond futures, which are down 12.30 seconds. The yield is rising this morning in the equivalent of cash, but this spread is the tightest in nearly a month. So we paused for a breath in the bond market last week. We actually ended up having the best week in bonds in 2 months. So there really was bond whiplash. Bitcoin, no such thing, powering through 81,000 and change, 81,785, nearly at 82,000. The flows into the ETFs are pretty substantial. This is the personification of a Trump victory and perhaps a pro-crypto regulatory stance. That's shape of play in stocks, bonds. As I say, the cash markets are closed for Veterans Day. It's a big week for CPI. We'll talk about the slate in just a moment. Let's follow on from last week's FOMC decision to cut by 25 basis points. Minneapolis Federal Reserve President Neel Kashkari appeared on Face the Nation to reiterate that the fight against inflation was still on the Fed's agenda.
Right now, the economy is in a good place. Inflation is still running around 2.5% or so we're not all the way home. We need to finish the job, but so far, so good. I mean, I don't want to declare victory yet. We need to finish the job, but we're on a good path right now.
With the fight still not over and the prospect of an inflationary Trump presidency, our next guest writes this: the largest impact will come from the inflation channel, and although tariffs are somewhat transitory, we believe that the Fed may be cautious in allowing another period of higher inflation so soon post the recent episodes, and therefore will react. It is Jamie Niven, Senior Portfolio Manager over at Candriam. Jamie, thank you for joining us this Monday morning. I mean, look, your top conviction is long the break-evens. You believe that this inflation narrative will reassert itself. So let's start with that. Do you believe that these break-evens and the inflation narrative spikes higher even in advance of what we know for policy on Trump Mark II?
Look, let's start with where we thought we were before the vote last week, and our view was that the disinflation process was really in process under the previous administration, or the current administration, apologies. And the big change is the fact that we have the Republicans taking both the Senate and the House, as well as the presidency, and the ability to do significant change, whether that's on the regulatory front, whether it's with tax cuts, or also with the tariffs. We think all three of these are inflationary, and if you add in that the potential immigration impacts, then that could be inflationary as well with lower labor supply. And therefore, we think that although the market has adjusted somewhat, we've seen US break-evens are higher than they were a couple of weeks ago. There was an increase both before and post the vote, and we think that can move further.
Do you think we get inflation or stagflation?
That's a very good question. I think with regards to the tax cuts and also potential fiscal spending, I think that could be some growth upside there. Evidently, with tariffs, you have the initial inflationary impact in the short term. We know that that's relatively transitory. It's a one-off increase. But in the medium term, you'll have the negative growth impact. So I think the question is a very good one, and it's a bit mixed, the answer. But I think in the initial stages, particularly with the animal spirits, we're seeing that from the equity market, and probably the uncertainty dissipating for businesses, that therefore they can start investing again. We think that there will be a positive growth impact in at least the short term.
How difficult is it to restrain oneself from entering these equity markets at record highs, 50 in a row this year? 20 billion went in last Wednesday. Is that a difficult decision given the valuations that I've given, 22.5 times forward earnings, or is it hurrah, jump over the cliff?
Well, thankfully, I don't have that capacity in my fund. I run fixed income vehicles, so I don't have to think too much about investing in equities. However, there's implications for credit. The only thing about credit is there's only so far that spreads can tighten. But going back to your question on equities, I think, as I say, the animal spirits come in, the positivity with regards to the certainty that businesses are going to have, or relative certainty with where the administration are going, make that an initial short-term positive trade. And there are particular segments of the equity market which are going to benefit more, particularly from the deregulation element.
Well, let's take it back to more to your ground zero. I mean, it is about asset allocation, whether we see cash from the sidelines come into the bond market or into the equity market. Rick Reader last week said venturing into the wild blue yonder of longer-term rates is maybe not worth the excitement or indeed the volatility. And one can empathize with that when you look at the extreme moves at the very long end last week. So where do you safely tuck away on the curve?
Yeah, the moves last week were interesting, weren't they? I mean, day one, we saw the long end selling off, but then we saw it rallying back. We think that actually that was because a lot of people hedged their exposure prior to the election via 10-year, and I note that you pointed out the 2s, 10s flattening last week. We think that was somewhat hedges being unwound in the 10-year segment of the curve. But going forward, we don't like the long end of the curve. We think that there's that potential for risk premium, particularly from the fiscal spending. And also at the front end, I think that pricing is relatively fair for the upcoming Fed meetings. So it's a very difficult question with regards to the curve, but we do think that ultimately it should be a steepening trend, particularly at the longer end.
Well, that's what I was going to say to you. I mean, I was quite surprised when I actually looked at the 2s, 10s over the space of the 5 days, and I went, wow, that's actually the tightest in nearly a month. To me, that's a relock, reload on the steepener, if you assume the policies are as you potentially lay out.
Yeah, I think the 10-year point of the curve is our favoured short right now. We think that should definitely move higher. With regards to the front end, I think it's more about timing there, because I think that in the short term, the Fed are still going to be focused on the data that comes in. They're not going to make too many preconceptions about what policy does come through. And therefore, in terms of the next few meetings, yeah, we could see 2 25 basis point cuts. And then once we have the implications of policy, that's when they'll decide what to do. And maybe that's when the front end moves a bit higher. But certainly in the initial stages, we think that higher yields come from the 10-year and longer.
So you're building up for a bit of a spoiler alert with the CPI then this week. I mean, we've got a number of speakers on the slate. I'm just looking here. You've got Waller, you've got Williams, but ultimately you have the CPI, and that could be a bit of a wrench for the old bond market.
You know what, Manus? I think the Fed would be happy to some extent to see a slightly higher CPI, because it would give them a reason to pause in the cutting cycle. They don't want to have any preconceptions about what policy comes out with the Trump administration. Powell was very clear with that last week. But if we do see a slight uptick in CPI, I think that could give them a reason to pause, and therefore it gives them more time to assess what the policy is. In terms of the number itself, we know that the second half of the year, over the last couple of years, has been a bit more positive for inflation, but I think the forecasts are for core CPI to be kind of 0.2 plus again. So relatively constrained, but maybe a bit higher than we saw in Q3.
Okay, let's see whether the spending on that election filtered through to the CPI. Jamie, thank you very much. Jamie Niven of Candriam on the markets this morning. Some other stories trending on your Bloomberg channel. This is what we've got for you. Chancellor Olaf Scholz is open to moving a parliamentary confidence vote to before Christmas, potentially speeding up a snap election to February. Scholz expressed confidence in a victory despite the polls suggesting his rival is ahead. Schroeder's is shrinking the size of the executive committee to 9 members from 22. This is as the new CEO looks to revive growth. The stock has slumped as much as 50% this year and didn't rule out wider job cuts. Moncler is poised to take over Burberry, and staff have already been told about the possible takeover, according to the Daily Mail. A representative told Bloomberg that the company does not comment on unsubstantiated rumours. And it is flying high. We've broken through $82,000 on Bitcoin. So we are just seeing a nice wash through. Just look at this. This is pre-market on Coinbase, up 18%. Mara Holdings, up 18.8%. You can't deny that when it comes to regulation or deregulation, this is the personification of deregulation. Crypto world spent $200 million on political action committees. And the Binance CEO said it's a golden era for crypto. Will roll on as Bitcoin trades through $82,000. Coming up, Trump's cabinet picks, they take shape. The president-elect picks his head of immigration and UN ambassador, while telling the former cabinet members they're not coming back.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Manishkrani in New York. Well, the Kremlin has denied a report from Washington Post that the President-elect Trump and President Vladimir Putin have had a conversation about escalating the war in Ukraine. Joining me now is Anne-Marie Horder, and our White House chief correspondent and surveillance anchor. I'll see you a little bit later on. So talk me through this, because we've got the Washington Post article saying they had a conversation, by the way, which was not guardrailed by anybody, we understand, from the State Department. And this morning, I have a different story that the Kremlin is denying the report in the Washington Post. So square it away for me.
Well, maybe they're denying the fact that Trump is saying that he advised the Russian president not to escalate the war in Ukraine, according to this Washington Post reporting.
Yes.
Allegedly, that is what President-elect Trump said on this phone call. They're not using government interpreters for this. They're not going through the State Department. Phone calls are not itself illegal. If it's working outside of foreign policy, if it's shadow foreign policy, that would pose a problem. But as one foreign policy expert in the Washington, D.C. arena for decades said to me, this is a raw display of political power. And right now, you are seeing a recalibration in the foreign policy sphere because the current president, Joe Biden, is the lame duck. And you're going to have, I think, former president over the weekend, for future president, called it more than 70 conversations he's had with foreign leaders. And they are trying to make sure that they have these conversations to understand what his foreign policy is going to be, because he has talked about on the campaign trail that he wants to see a break from the current status quo.
That's a really, really rich phrase. It's about, it's about showing, again, we wouldn't expect anything less, that something slightly out of the ordinary takes place. But this is all within the realms of normality. It's when he goes into the presidency that you maybe want to see a little bit more guardrails. We're also trying to understand who's in the cabinet. There, Mike Pompeo, Nikki Haley, they're not being invited back to the table. So the question then becomes, he's made some appointments over the weekend. We've both just opened a story in terms of the Treasury appointment. It looks as if it's squaring down to between Howard Lutnick and John Paulson. So we're not overly confused about that. So it looks as if that's squaring away. What else do we know this morning?
So I would say for Treasury, also Scott Bessent is probably
of
one
course
of the
he's
main
in there as well.
runner. If you actually look at the predict market, Scott Bessent is north of 80%. And the prediction markets were accurate when they were pricing in Donald Trump's victory. So potentially they're accurate when it comes to the Treasury appointment. And potentially this is an endorsement by the markets about who they'd like to see. I think Howard Lutnick's at 1%.
Well, he's in charge of sort of interviewing the people coming into the cabinet.
He's a co-chair of the transition team with Linda McMahon. But it seems that also his name is floating around maybe to be the co-chair of the transition and name himself maybe part of the Treasury. So we're also waiting on Secretary of State.
Yes.
That'll be keenly in focus, as well as who is going to be President-elect Trump's national security advisor. And we are seeing a drip feed of some of these appointments. And it's important because personnel is policy. So we know that President-elect Trump has named now a border czar who was in his prior administration. He's also tapped Elise Stefanik, a congresswoman from New York, to be the UN ambassador. New York Post says she has accepted that. The New York Post has statements from both Trump and Stefanik. The Stefanik one is interesting because this means that it's going to be a very slim majority in the House. We don't even have the House confirmed about who has the power there. It looks poised to be a trifecta Republican sweep, but that would mean that Kathy Hochul, the governor of New York, has to call a special election for her district. So interesting that Trump was willing to take this move on Representative Stefanik, because it does mean that it's going to be a little bit harder to shore up the House.
And just on the House, I was reading Terry Haynes' notes this morning. Majorities don't mean control, and it's perhaps the most misused word in politics. But let's just close off with where we are on the House race. We've both got the same numbers open. I mean, again, the predicting markets are saying it is going to be a red sweep. What's happened over the weekend?
It is going to be a red sweep, right? Likely. Poised.
Likely.
And Terry Haynes is 100% accurate.
You
can basically have walking around 218 kings, because to get something passed, everyone's going to feel emboldened to say, well, you need my vote to get it passed. You have to come in line and see my view of things. So it's 203 Democrats, 214 Republicans. To get control, you need 218. So the Republicans are almost there. We're still waiting on at least more than a dozen House races to be called, most notably in California, hopefully by the end of the week, because Congress is heading back. Lawmakers are heading back to Washington, D.C.
For a lame duck session? Okay, Anne-Marie, thank you very much. Anne-Marie Horder there with the very latest on Capitol Hill. We'll take a short breath as these equity markets and crypto markets explode higher this Monday morning right here from New York. Good morning.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I never.
Ready? Go.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's Bloomberg Brief. I'm Manish Cranny in New York. Time for your front pages. This is what we're looking at this Monday morning. You've had the politics. Let's talk about a few other stories. First up, Reuters leads with the U.S. telling TSMC to stop AI shipments to China. It comes weeks after, TSMC notified the Commerce Department that one of its chips had been found in a Huawei AI processor. Now, TSMC said that it was law-abiding in what they do, and that the company would comply with the rules and regulations. Next up, the Journal leads with reports that Russia is weighing plans to merge its biggest oil companies. Under one potential plan, the state-backed Rosneft would take over Gazprom and Lukoil. A Rosneft spokesperson told the Wall Street Journal that the reporting was false. That's according to the information available to him. Let's round it off with Bloomberg. We're leading with this story. China is nearing a $1 trillion trade surplus. The growing trade surplus is generating pushback from other countries, including the U.S. The country is relying on more exports to compensate for weak domestic demand. Well, joining us now is our Chinese economy and government reporter, James Mega, in Beijing. James, look, it's a banner headline of $1 trillion surplus, but let's be frank, they are not alone in terms of their surplus. This is a rising issue around the world. But walk us through the numbers.
So yeah, I mean, if China's trade continues for the next 2 months, or through this month and next month, as it has for the first 10 months of this year, China's looking at about $950 billion or $1 trillion surplus for the year, which would be a massive record. So far this year, it's up 16% on what it was last year. And, you know, this is not just a problem with the US. Obviously, Donald Trump has made a lot of, you know, for his first term and then again coming into his second term now, he's had a lot of problems with the large and growing deficit that the U.S. has with China. But if you look at the numbers, actually the deficit with the U.S. is not growing that quickly. It's the deficit with other places that China, or the surplus that China has with other places, they're actually growing very, very quickly, partly because U.S. tariffs are still quite high on Chinese goods. You know, the deficit with the Chinese surplus with the EU is up 10%. The Chinese surplus this year with ASEAN is up 35%. Surplus with Brazil, India is growing. Surplus with India so far this year, $85 billion. That's more than double what it was 5 years ago. And so you're looking around the world and you're seeing Chinese goods are going everywhere, and yet the Chinese economy is very weak, and so China's purchases of goods from other countries are actually falling. You're seeing falling commodity imports. You're seeing weak imports of intermediate goods from places like Japan and South Korea. So while China is benefiting from this rapid increase in its own exports, it isn't then bringing other countries along and buying their products, or not as much as it was previously.
But then this brings us back to part of the angst from the markets last week, which was there was a plan to help local government bond debt, but there was an underwhelming sense of there's not enough being done to domestically boost demand. That is the eye of the storm here, isn't it, briefly?
Right, and unless they do something to either cut capacity on things like steel, where they have way more steel production capacity than they need, or they boost demand for steel and other things like that, you know, glass and cement in their own economy, then these products are going to continue to go overseas. China has way too much steel, they have way too much copper, they have way too much capacity to make these things, and either they need to boost their own economy to absorb them, or they need to cut capacity and stop exporting them. And if they continue to export them, and they continue to export them cheaply, the US is going to say no once Donald Trump comes in, and the rest of the world is going to be faced with either a flood, or they'll have to say no to.
Okay. Thank you very much, James. Great reporting there. James Mega, our Chinese government and economy reporter, with the very latest. Coming up, Mark McCormick, Global Head of FX and EM Strategy. He might have a thing or two to say about tariffs and FX.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
From our global headquarters in New York, welcome back to Bloomberg Brief. I'm Manish Kranny. Let's set that agenda. Risk on and powering through to new record highs. U.S. assets emboldened as the Republican victory continues to boost appetite. Finish the job. Minneapolis Fed President Neil Kashkari says the path to 2% is not done yet. And President-elect Donald Trump taps his former immigration chief, Tim Homan, as the borders are. Good morning. We're powering through to records on equities. Again, this morning, it is Veterans Day. The cash market is closed. Look at Tesla. I mean, the shorts. There's a great story on your Bloomberg terminal this morning that the hedge funds who shorted Tesla into the election are being quite literally butchered at the moment. S&P 500 up 0.25%. We put on 4.7% last week. Small caps, the best week since 2020, up nearly 9%. You now run into the challenge of whether valuations matter and will yields come back to bite you in the proverbial. S&P trades at 22.5 times forward earnings. The average is 16. Roll it over and I'll show you not the cash bond market because it is closed for Veterans Day. I want to show you the 2s, 10s, the tightest in nearly a month. We've just had a conversation where the expectation is this is a reprieve for the moment on the rate story. Cash rates, by the way, I'm showing you futures at the bottom. They really are powering lower in terms of price. So down in price on the futures, 23, 30 seconds at the moment. And that is a spike in yields when the cash market reopens. Lots of houses are now saying JP Morgan, Allspring, 5% is where you could return to on yield. Have a look at the FX board because this is the transmission mechanism really of the power of the yield and the power of the dollar. Absolutely powering ahead on dollar yen. I mean, the hedge funds are the most negative on yen since August. The Bank of Japan lacks conviction. The hints about caution on a rate hike with no clear narrative for December. The euro is down. I'll hand the one-liner to Kit Jukes. The euro has a problem. It's called Germany. It's going to take a heck of a lot to hold it off from 105, which is pretty near. And there is the dollar up by 0.25%. Let's take all of that U.S. asset exuberance to Mark McCormick, Global Head of FX and EM Strategy at TD Bank. Mark, this is the very personification of what you said to Danny and I 7 days ago. U.S. exceptionalism, asset exceptionalism translates into dollar exceptionalism. The only thing that I can see as a headwind is a headwind of a pause.
Yeah, I think the only headwind you have right now is positioning, right? There was a ton of buildup in long dollar positioning, Trump trades, as you would call them. And essentially, you know, when we look at our positioning indicators, things look a little bit stretched. I think this is going to be a long and winding road. I think, again, we have a little bit of a runway here until January. We do get data. We are going to kind of look and see who the cabinet members are. I think Lighthizer being talked about as U.S. Trade Representative is kind of interesting again because that brings that tariff heating up of trade rhetoric really quickly right into the administration. But keep in mind, we do have data, and some of the European data has got a little bit better. U.S. data seemed a little bit softer, but I would say right now we have an inflation number, and that's a big thing that we've been kind of focused on. Is the last two indicators we had on inflation, we've seen upside surprises. So I think if we do get a dollar dip, it's going to be very shallow and very short.
Okay, and that CPI is expected this week, but you don't think that's going to unseat the dollar trajectory for the moment?
Absolutely not. I think it's going to reinforce, we've seen the dollar kind of moving a certain direction. If the market wants to kind of wind down a little bit on the positioning side, we're actually looking for an upside on CPI this week in terms of the month over month, a little over 0.3. So I would say that if there is a little bit of a pullback here in the dollar, even as we go into the data, the U.S. data itself is reinforcing you want to buy the dollar, independent of what's kind of going on around the election and the trade war and all the associated policy indicators.
If I look externally, I look at the ECB, the PBOC, and the BOE. Who front loads most aggressively here to try and counter the alpha of the dollar?
It's kind of interesting because they all have to kind of go in the same direction. I think what you want to think about is that we are, as you just mentioned, the problem for the euro is Germany, and it's also France. Those two countries have challenging kind of political environments, political economy environments. It's really going to force a lot of uncertainty. If you look at the uncertainty indicators themselves, which scrapes news indicators and looks at that around a theme of economic uncertainty, it's the highest in Germany. So we're likely to see, again, we saw the government collapse. We're likely to see elections potentially as soon as January or February. And so the euro is going to be dealing with local uncertainty and external uncertainty. So I think if you have to think about where the transmission mechanism comes in is how is Europe going to grow? How is Europe going to build confidence? How is Europe going to attract capital flows, particularly when we think about equity flows? I think China is a little bit different, because China's had the money, China has savings, China has enough capital to grow. It's just chosen not to. So what I think here is the euro is going to be the first one to go, especially because if you kind of think about what the policy incentive is in China, is they do want to maintain stability in the renminbi. And I think a big thing here is they're not going to let the currency go to offset the economic uncertainty and the shocks that are come through on the trade side. I think they're actually going to again continue to try to cap it. So a lot of this is probably going to come through the euro. It's going to come through sterling, but I do see Chinese policymakers kind of holding steady. I think we can get to a 730 really quickly, and if the trade war really heats up early next year, maybe we get to 745, 750. But I think that's kind of the red line in the sand there. So I would say a lot of this is going to come through the euro.
So that's a pretty powerful call on the yuan. Let's just drill into the euro-dollar trade a little bit, and obviously euro-yen is where we maybe see a little bit more action. It now sounds as if obviously we've got a trade angst in the euro, we've got rates angst in the euro, and we now have a very serious political flesh wound potentially to come to the euro. With that trifecta, is there an inevitability of a path to parity?
Absolutely. Yeah, I think this is kind of the worst case scenario you could think of for the euro. I would say, again, 105 is probably an interesting number that is just, markets like these kind of 110, 105, 115. Yeah. The next move from 105, and you kind of open up your charts, you go back to last 5 years, you go through 105, you're just looking at parity just as a technical level. That's not even withstanding the kind of fundamental changes that are likely to occur once we get to January and we see the policy implications. So again, the key thing that we kind of look at in FX, and I know a lot of people like to look at central banks, but again, look at the relative equity markets, look at the relative growth story. You're still getting more carry in the US. So I think, again, there's going to be very challenging for the euro in this particular environment, and parity is absolutely in play. And again, I think people are going to talk about it very quickly. We actually we had that parity radar screen in mind in July, early in the summer, when it kind of looked like a red wave was the most likely outcome. But again, it's now going to come back to the fore. And again, we're now dealing with this with a very challenging political environment in France. Again, the rhetoric in Germany is kind of heating up in terms of where the election is going to go and what the outcome is going to be. And again, the outcome for the German election is going to be huge, because if Germany doesn't figure out a way to grow, we're going to look at parities and inevitability. But if Germany finds a way to maybe try to manipulate the debt brake or try to find a way to stimulate the economy, that could be something that this election could be a good outcome, at least relative to a baseline where the euro could hit a euro. But that's going to be very critical, is how does Germany find a way to grow?
Very quickly, Mark, I mean, there's no doubt about it, it's going to be gripping. Just very, very briefly, I just wonder to what extent do we have a head fake on dollar Mexican last week, because it was, crashed on day one, rallied on day two. Ultimately, every rally in Mex is an opportunity to sell.
I totally agree. I think, again, this is kind of like when we think of worst case scenarios. For the euro, again, this is bad because the local story, the external story. For Mex, it's the same kind of scenario where, if you think about what happened, we had an election in Mexico this year that didn't go as markets as expected. Sheinbaum basically has about 2 seats. She's missing about 2 seats to have a supermajority, which means you could have constitutional change, you could have judicial reform. All these things, it's a bit scary when you think about the en bono market, which is basically held 30-40% of holders are foreigners. So I think the story in Mexico as a local story has gotten challenging for markets to understand. We've talked about this before. The carry trade, all the pieces that you care about for the carry trade, they've all fallen apart this year.
They have.
So again, the Mexican peso has been the key underlying currency that people liked on the positioning side. In the U.S. election, Again, the key thing to watch here is USMCA has a sunset clause next year. So there's going to be renegotiations around the old school, you would call it NAFTA. But Mexico has a big spot to lose here. Number one, if the U.S. decides it doesn't want Mexico to participate in any kind of trade relationship with China, or if two, U.S. finds a deal with China to invite China into the North American supply chain, then it cuts Mexico or it reduces Mexico's role within that supply chain, which is Mexico's very reliant on growth, selling stuff back to the U.S. And third, if we think about immigration, a big driver of Mexican capital flows comes through remittances, which is essentially people who have moved to the U.S., send money back home. If there's any kind of movements on immigration, that's going to have an impact on the capital flows, which have been very supportive of Mexican peso over the last 5 to 10 years.
Mark, great landscape setting. It's going to be a bumpy ride, as you say, through 2024, a long and winding road of FX. Mark McCormick there of TD Bank on Bloomberg this Monday morning. Good morning.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington. It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It's Bloomberg Brief. I'm Manish Cranny in New York. President-elect Donald Trump's cabinet is taking form with just 2 months to run until he makes his return to the White House. The former president is tapping Tom Homan, who was the public face of the zero-tolerance immigration policies as his new border czar. Bloomberg's Megan Crane joins us now from Washington. So, Megan, when we look at this in terms of the immigration narrative, obviously we have the big take, the first 100 days, the appointment of a zero-tolerance czar. What are they capable of delivering? What are the logistics involved in actually delivering one of the biggest deportations in history? Good morning.
Good morning. Yeah, that's really the big question, isn't it? They are going to be focused probably on removing the million or so people who have no legal recourse to stay in the country at this time. But that requires a lot of logistical challenges, getting those people, rounding them up, I suppose, is one way to articulate that. But importantly, they have to get permission to bring them back. There are countries with whom the United States does not have good relationships. Presently, Venezuela, for example, China, who have refused those flights before. So there are logistical challenges to removing even the people who do not have a legal recourse at this time.
Now, look, markets bounced around late on Thursday and on Friday that Lighthizer may make a return. Then there was some sort of quasi denial by him. But here we are. It can range between 20% to 60%. We don't know the details on tariffs. But in terms of the first 100 days, the debate is going to be whether it is fast and furious and a lot of noise, or whether it is actually blanket tariffs in the first wave.
Right. Well, then I think we have to go back and look a little bit at the first Trump administration. There was a lot of noise and not necessarily so much action in the first 100 days. But Trump seems very determined to move quickly. He is talking about appointments that are of people who will really want to move forward on those things quickly. These are tariffs are obviously things he can implement just by dictate. So, like you said, a lot of things are up in the air. It depends on sort of what the impacts of those tariffs start to do to the markets, how he would respond to that.
And let's just square away. We're counting the numbers, the betting markets. I mean, they've laid their bets against a number of different things. Scott Bessent, almost a shoe-in for Treasury Secretary. But when it comes to the House, it is assuming now more and more that we're moving towards a trifecta. In other words, a red sweep in the House of Representatives. There's the numbers at the moment: 213, 203. I loved Anne-Marie's line. It could be 218 kings and queens walking around in the House of Representatives on the red side.
Yes, it's definitely, you'd rather be a Republican in this moment when they're sort of finishing up the counts. The Republicans need, 5 of those open seats or, remaining seats to win, and the Democrats need more like 15. So the Republicans are in a much stronger position at this point. It looks like they will be able to, for at least the first several months, push through what it is they want to do. They will have a narrow majority if they have one, however, and that hasn't proven a particularly efficient way for them to get things done in the past.
No. Megan, thank you very much. Megan Crane there on the first 100 days. What you can expect, it is your big take. Jump on your Bloomberg terminal and catch up with the very latest. It is the weekend's edition, as I say, of the big take. So we're talking about the president-elect Donald Trump. He's getting busy with his foreign counterparts. We understand reports of phone calls with the Turkish president Erdogan, Israeli Prime Minister Benjamin Netanyahu. And in the Washington Post reporting this over the weekend, that he also spoke with the Russian president Vladimir Putin on Thursday, discussing the goal of peace in Europe. Now, this morning, Putin's spokesman told reporters in Moscow that the report was, quote, pure fiction, and that there was no conversation. Stephanie Baker knows a thing or two about Vladimir Putin and this world of fact and rumor. Stephanie, good morning. Good to have you with us. So we've got the Washington Post saying that there was a conversation not to escalate the war in Ukraine. Now we have the Kremlin denying the report took place. This is the beginning of the kind of political theater that we can expect a lot more of. What did you make of the denial, first of all?
Well, it wouldn't be the first time the Kremlin denied a report that ended up being true. Remember, Dmitry Peskov, the Kremlin spokesman, repeatedly denied that Russia was planning to invade Ukraine back in early 2022. And he also denied a Wall Street Journal report last month that Elon Musk had been in regular contact with Putin. Now, neither of these reports have been confirmed by other outlets, but the reporters at the Washington Post who wrote that story are experienced and well-sourced. So if it's not true, that means several sources in Trump world deliberately released false information. Now, Trump actually said after his call with Zelensky that he was planning on talking to Putin. So it's in keeping with what he's been up to. And I think part of the problem here is that there are no State Department people on any of these Trump calls with world leaders, as would usually happen. So we're left guessing with anonymous reporting. And I think the truth will eventually come out.
And I think, as Anne-Marie pointed out a little bit earlier when I was chatting to her, they can have these shadow conversations, but without this governance in tow, it's going to be very difficult for the world to understand what is going on. But let's pivot to one or two conversations that we do know happen. Netanyahu says he sees eye to eye with Trump on the Iran threat, which I think is fascinating. But what caught my eye even more so is that Elon Musk, by all accounts, was introduced on a call to Zelensky. This just shows you where we are with foreign policy, or the risks of somebody not elected and a billionaire status joining calls of national security importance for the United States of America.
Right, and someone who doesn't have any national security clearance and probably won't get any, and has business interests both in Ukraine as well as elsewhere. So I think this is, it is difficult to sort of sort through what's really happening here. Obviously, Elon Musk has allowed Ukraine to use Starlink, his Starlink satellites, in Ukraine, but stopped Ukrainian officials from using it over Crimea because it's claimed as Russian territory. So I think Elon Musk's role in this is very interesting because of that report that he had been in touch with Putin. What is his agenda here? And it's all very murky, and there's not a lot of disclosure.
Okay, Stephanie, thank you so much for joining us. Our Bloomberg senior investigations writer, Stephanie Baker, there on the very latest. Bitcoin is on fire. Global markets are moving. Yes, it is Veterans Day. The bond market is closed, but let me just show you what is going on across these assets at the moment. S&P 500 powering ahead. It made 50 records last week. We put on 4.7% last week, trading at 22.5 times forward earnings. Let's see how the bond market opens tomorrow morning. I want to show you the crypto markets as well. Powering through, we made it up to, let's just double check. There we are, Bitcoin at the moment, 82,150, up 96% so far this year. Emily Nicole is with me. I mean, wow, this is the Trump trade of pro-crypto deregulation writ large, isn't it?
Yes, definitely. Yeah, Bitcoin's been on a bit of a tear over the last few days ever since Trump was elected, getting up to that new all-time high of above 82,000 early this morning. We've definitely seen a lot of money flowing into crypto over the weekend, and a lot of the smaller tokens are up as well, some of them even outperforming Bitcoin. Coins like Dogecoin and Cardano's ADA are both outperforming Bitcoin as well.
Do you get a sense that the institutions had de-risked? Part of the narrative I know in the stories is that the institutions had de-risked ever so slightly going into this, but you're seeing record inflows into the ETFs.
There was definitely a bit of caution before the election. We didn't know which way it was going to go. The polls were definitely indicating a neck-and-neck tie, although crypto-based prediction market, Polymarket, was saying it was a lot more in favor of Trump winning, and of course it proved to be correct. And so now that that's over, and we can now see that there's definitely going to be a clearer path towards crypto regulation in the US, a more pro-crypto stance from the US government, that's why institutions are probably now feeling more comfortable about getting involved in Bitcoin again.
So what exactly has Trump promised to do? Because obviously Gary Gensler was a thorn in the side of the crypto world for a long time. There was a lot of conflict, especially over the definition of what Bitcoin was in terms of an asset. What's the promise?
So over the summer, when he was on the campaign trail, Trump promised to fire Gary Gensler on day one. As you pointed out, Gary Gensler has been a thorn in the side of crypto for quite some time. There's been a lot of enforcement actions against crypto companies over the last couple of years. So that was a big one that the industry really, really wanted. And then other promises have included making sure that all Bitcoin mined from now on would be in the US, because a lot of the technology used to mine Bitcoin comes from China. And he hopes to create a strategic reserve based in Bitcoin for the US government as well.
So a lot of promises. Let's see what translates from electioneering to actuality. Emily Nicole on the crypto trail this morning. Coming up, we'll set you up for your trading day and your week. A host of FedSpeak coming along right here on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
It's Bloomberg Brief. I'm Manus Cranny in New York. A look ahead for this week. Bond traders, cash is closed today, both in the US and in Canada. It is Veterans Day. Futures are open and they are powering lower in price. We've got a host of Fed speak coming through the week. Waller, Barkin, Kashkari, Harker, Williams, all on deck. And in data, it is all about the CPI. That will hit the tape on Wednesday, followed by the retail sales on Friday. The health of the consumer, important. Tesla this morning, absolutely powering ahead, extending its gain. The stock climbs above $1 trillion in valuation. Of course, that was a lot of the hedge funds were short of Tesla into this election, so they are being taken out one by one. Coinbase, MicroStrategy, crypto-linked stocks all rally as Bitcoin climbs above the $82,000 level. S&P 500 up 0.25%. We put in 50 record highs last week, so this market, the dollar is strong. Equities are rising, and when those bond markets reopen tomorrow morning, it's going to be interesting to see how that spike in yield, if it holds, challenges through to the equity market. I'll see you in just a moment. The surveillance team will take you through the next couple of hours. Context matters on Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
The U.S. economy is just doing so much better than the rest of the world.
This is a period in which U.S. dominance of the global system is going to increase, both for positive reasons and for negative reasons.
You're really going to start seeing the market focus on the impact of tariffs.
There seems to be something about political leadership transitions that help usher in some leadership style transitions within the U.S. equity market.
Markets have trouble pricing election risks, period.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
From New York City for audience worldwide, good morning. It's Bloomberg Surveillance alongside Danny Berger and Manus Cranny today. I'm Anne-Marie Hordern. Lisa Abramowitz is on assignments, and nearly 30 hours of TV last week, Jonathan Farrell is taking a much-needed day off. Today in the markets, they're still pricing in a Trump trade. This is after the S&P 500 secured another record. I find this fascinating, Danny, because the market seems to think we are going to have a trifecta, even though we are still waiting on the balance of power in Congress. We don't know the makeup of the House.
That small cap rally is so telling. 1.2% on what? On basically nothing, just a continuation of the Trump trade. And Anne-Marie, part of the reason it's so significant is we get a lot of data this week. We have CPI and retail sales, usually on a Monday ahead of that. We patiently wait and see what happens. But for this market, the politics is more important than the data.
Politics more important, though, Manus, I imagine for the Fed this week, the data is going to be important. Neil Kashkari over the weekend talking about the fact that the job is not done to get to 2%.
The job is not done, and then you've got to ask yourself the state of play in terms of the break-evens. This market is hesitant to see the trajectory back to 2%. There's a couple of other lines that he mentioned, and I think this is important in the context of what is deliverable under the deportation czar that has been appointed. There's three lines that he actually mentions. One is the risk of tit-for-tat tariffs, and he's concerned that the deportations could cause disruptions for some quarters. Now, this is the whole point. This administration, if you look back at Trump 1, they never actually deported as many people as Obama did in his first and second term.
I love this. It's the playbook. Basically say, it depends. We don't know. It depends how it plays out.
Yeah.
It is different from the Powell playbook, which was just no.
And a lot of it depends on personnel, because we know in Washington, personnel is policy. And actually, that's why, and Danny, you brought this up earlier, we actually saw the dollar strength into the weekend because that FT report that Robert Lighthizer, the tariff czar, will be going back into the administration. Let's take a look at where the markets are trading this morning. We do have the euro dollar lower on that news. Dollar strength really across the G10 for some of this personnel is policy 106.69 there. A lot of strategists are coming in and saying, look, we might see parity. And WTI this morning, this also due all China demand, under 2% lower, 69.19 on New York crude. Coming up this morning, Marvin Lowe of State Street as U.S. equities hit another record high. Former State Department spokesperson Morgan Ortagus on President-elect Donald Trump's foreign policy priorities, and Sucharita Kodali of Forrester Research as retailers prepare for those looming tariffs we were just talking about. But we begin this hour with U.S. stocks looking to set new record highs. After the re-election of Donald Trump, Marvin Lowe of State Street writing this: markets were always inclined to rally in the event of a Trump presidency, and true to form, asset classes have performed as expected, an indication that investors were not broadly positioned for his solid victory. Marvin joins us now. Marvin, good morning. Thanks so much for kicking off the week for us. You would think that maybe markets were over their skis, especially given the fact that we don't have the trifecta yet. Yes, the Republicans are poised to take the House, but we don't have the trifecta yet. But you think this has more room to run. Why?
I do. I do think that the market is increasingly trading the red sweep. The Democrats certainly have not made the progress, even though we're waiting for votes to come in, and the general momentum, if you will, that Trump kind of brought to the voting booth is something that investors are willing to bet on. Probably more important is that our investor behavior, which kind of looks at real money, both holdings and flows, didn't really see that investor group go heavily into a Trump trade, if you will, before the election. So in a lot of ways, they're catching up as it becomes more clear that, we might have a very good chance that we have a unified government, at least this time around.
Right. The past week would have been so painful if you weren't in equities. But for treasuries, Marvin, we had talked the day after the election. Yields were up, I don't know, somewhere between 10 and 20 basis points when we spoke. And you said, this makes sense. This can stick. However, it didn't stick. On the week, 10-year yields ended lower by 8 basis points. What do you make of that reversal?
Yeah, I mean, it's going to be a choppy process for sure. The market was overly short kind of going into this. We didn't get any surprises from Powell. What I would say, however, is even though duration outperformed, when you kind of look at the term premium components, which is where I focus on in terms of structural shifts in what the market wants to value duration at, you still see term premiums picking up. So that actually is probably more difficult for risk assets to deal with, once we get to some higher levels. So, I'm still convinced that the market is going to eventually have to push back. If not, the administration will, certainly try to grow this deficit because it'll view the market as saying it's okay.
But this is the thing, Marvin. It's a market that has a lot of inputs it needs to grapple with. You mentioned the Fed just briefly in what you were describing. We're going to get data this week, CPI and retail sales. Is this a market that will be moved more by the politics or by the data?
So I still think it's the politics that are moving things. If we're talking about the bond market, the short end of the curve is probably going to be moved more by data because that's something that we can measure a little bit more in terms of what the Fed's response function is going to be, at least for the next couple of meetings. Nobody really knows how the Fed's going to approach the administration in the middle of next year. But short term, whether or not we talk about December, whether or not we talk about a continuation going into January, that's data. Longer term, it really is politics, and how much as you mentioned, this might or might not go down. The other thing might or might not get implemented. Once we get an idea of what policy actually looks like, then we can really start to price in what type of term premium we need and what type of valuations should go along with those term premiums. What I would say is that right now, kind of those term premiums are still relatively low given history, and valuations are still relatively high. So that equation, if you will, is a bit of a challenge if, in fact, we see spikes in term premium, which we've started to see over the course of the last couple of weeks.
Marvin, good morning. Probably the most shocking thing was you saw the 2-10 curve back at the tightest that it's been in nearly a month. So the bond market began to give itself a little bit of a breath at the close of business on Friday. Yeah. That's closed today. Yeah. I like what Rick Reader had to say, which was venturing out to the wild blue yonder of long-term rates. It's a dangerous game, isn't it?
It is if you're trading it for sure. The leverage, kind of the way you're able to really capture convexity on the curve. It is a dangerous game with a lot of volatility.
The other thing that came across my inbox this morning was talking about the performance in credit and the Bloomberg corporate bond OAS, 74 basis points. This is the lowest in a century. So this is exceptionalism personified. How do you look at corporate and credit spreads right now? Because they are so tight, they're so priced almost to the perfection of exceptionalism.
Yeah, for sure. So, if you are a spread investor within the corporate world, it gets harder and harder to buy. Certainly if you're shorting treasuries and you're just looking for more spread compression, you have to wonder how much more it can compress. Having said that, income is generally under-owned in this market, just given how poorly overall rates have performed. So if you want to lock in income, it's pretty easy to see how some of these corporations, particularly shorter duration aspects of it, will do well under the new administration. It does depend refi risk. It really does depend how much we push term premiums kind of going forward. But if you want to lock in income, I still think that's a trade from an overall risk perspective that people are going to put on.
Over the weekend, we heard from Minneapolis Fed President Neil Kashkari, Marvin, and he said rates, it could be a little bit easier than previously expected in terms of how far they're going to go when it comes on this cutting cycle. He almost put a little bit of cold water on December, reading some of the tea leaves, but you think the Fed continues to cut and into next year. How difficult is that, though, when you hear some of these policy proposals coming out of Mar-a-Lago?
Yeah, I mean, every data point is live. The Fed is trying to deal with certainly a set of known unknowns, which makes it incredibly challenging. Having said that, at kind of these high 4% ranges, the Fed still thinks that it can cut. And remember, we've had decent data, but we've also had mixed data. So the jobs market certainly did not look as strong as it did after the last jobs report relative to what we saw in September. So we're kind of parsing that type of environment, which again, as mentioned, the long end of the curve is dangerous, and it's going to get bounced around based on a lot of these types of inputs that we have to incorporate.
And when it comes to looking into next year, you also say dollar weakness over time, even though we are seeing serious dollar strength across the board. What is going to drive that weakness?
Yeah, I mean, ultimately, we'll see how the tariffs evolve. We'll see how much retaliation goes along with that type of policy, whether or not we wind up with trade wars. And that does create an environment where inflation can come back. Stagflation actually becomes more of a concern than I think we've seen in several decades. All of that creates an environment where you really do need to be concerned, particularly if you go significantly overweight. But, the caveat to that right now is that as these Trump trades continue to make their way into the market, the dollar is one of those asset classes that does have a tailwind. So, I wouldn't be aggressively betting against the dollar at this point for sure.
In that scenario, if we can do some scenario analysis, Marvin, something that looks stagflationary, something where inflation comes back, take me to middle of 2025 through to the end. What do Fed fund futures look like? How far can the Fed go? And are we going to be talking about hiking?
Yeah, I think 3 3/4 to 4%. Right now, the market kind of has it about 3.6 in terms of how low the Fed could go. That's relative to what the Fed said in September when it thought it could go to 2 7/8. So, the market is already saying that there's 50 to 60 plus basis points of rate cuts that it can't get to. If we do get tariffs to the extent that the administration is talking about, 10 to 20% and, upwards of 60% for China. And we do get some of that immediate retaliation. I think we do wind up with stagflation. I do think we wind up with a Fed that is somewhat challenged in getting funds below 4%. So I would kind of think that you still have that kind of play going in there. Probably more important is that the amount of debt in the event that the deficit really balloons starts to really come into the market in the second half of next year. So you've got all of these things that are going along that really, to me, still speaks to a steeper curve, even though we might not get rate cuts as aggressive as the Fed really said just 6-7 weeks ago.
Marvin, what we do know we're going to get this week is CPI, PPI, retail sales. What are you looking forward to?
Yeah, I mean, every data point is live. So CPI is once again expected to be, above averages, above kind of that 2% target. It's going to make the Fed's job that much more challenging. And retail sales really speaking to whether or not this consumer still has gas in that tank, if you will, to continue to spend, even though it's spending down those savings. I think that part of the data that has really made it hard for the Fed is a lot of this confidence data, the soft data, if you will. And with the elections out of the way, and generally speaking, with the Republican in the White House, a lot of the business data starts to pick up. So all of that does spell an environment where I think you continue to have decent tailwinds, both from the political side of things as well as from an economy that's still holding on.
And most importantly, we got some clarity for this market. Marvin Lowe, thank you so much for joining this morning.
Thank you.
Marvin Lowe of State Street. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahira Hackis. Hey, Yahira.
Good morning, Anne-Marie. President Joe Biden will host President-elect Donald Trump at the White House on Wednesday, setting in motion a transition of power that will be completed in January. The two will meet in the Oval Office at 11 a.m. that day. One topic set to be discussed is Ukraine. Biden's national security advisor said in an interview Biden will try to convince Trump not to pull support from the country in war with Russia. And you touched on this. Federal Reserve Bank of Minneapolis President Neil Kashkari said the economy is strong, but the Fed is, quote, not all the way home, and the central bank needs to finish the job of bringing inflation down to target. This after the Fed lowered interest rates by a quarter point last week in its second consecutive cut. Kashkari also reiterated that another rate cut is certainly possible in December. And a rally in Bitcoin hitting $82,000 for the first time. Of course, getting a boost by President-elect Donald Trump's clean sweep of 7 swing states, plus optimism on a more crypto-friendly Congress. The crypto industry expects a more favorable regulatory environment and potentially the approval of more ETFs from the president-elect's upcoming government. Bitcoin is up 94% so far this year. That's your Bloomberg Brief. Anne-Marie?
Thanks, Yahira. Up next, Biden's final push for Ukraine.
President Biden will have the opportunity over the next 70 days to make the case to the Congress and to the incoming administration that the United States should not walk away from Ukraine.
That's next. You're watching Bloomberg Surveillance. Very good Monday morning.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power live around the world every weekday, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season. Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Surveillance. Lisa and John are off today, joined with Danny and Manus around the table as the market continues to price in further room to grow, as Marvin Lowe just told us when it comes to this Trump trade. S&P 500 secured another record 50th all-time high. You're seeing a ton of dollar strength as well across the G10. Euro dollar right now, 106.63. Under surveillance this morning, Biden's final push for Ukraine.
President Biden will have the opportunity over the next 70 days to make the case to the Congress and to the incoming administration that the United States should not walk away from Ukraine, that walking away from Ukraine means more instability in Europe, and ultimately, as the Japanese Prime Minister said, if we walk away from Ukraine in Europe, the question about America's commitment to our allies in Asia will grow.
Here's the latest. Trump's election victory and a potential GOP congressional sweep is raising questions about the future of U.S. aid for Ukraine. The president-elect confirming that 2 Ukraine supporters, Nikki Haley and Mike Pompeo, won't be joining his administration. This, of course, as Biden is set to host Trump at the White House on Wednesday. Former State Department spokesperson Morgan Ortagus joins us now. Morgan, thank you so much for joining us this morning. Your former boss, Secretary of State Mike Pompeo, will not be going back into the administration. There was pushback from a lot of individuals in the MAGA world about the fact that Nikki Haley, Mike Pompeo supported Ukraine, what they call neoconservatives. We know personnel is policy. What can you tell us about the names that are being discussed?
Well, first of all, I would say it was going to be challenging with the makeup of the new Congress to get more Ukraine aid through anyway. I think it was headed in that direction. That's also why you saw Zelensky over the past few months saying that he was going to start working towards a negotiated settlement, that he had different proposals he was putting forward. So it's not ultimately a big surprise to me, but when you look at the 3 names for Secretary of State, you have Rick Grenell, Bill Hagerty, and Marco Rubio from Florida. Susie Wiles, I believe she ran Marco Rubio's one of his Senate re-election campaigns. She's a longtime Florida political hand, and of course he campaigned quite a bit, has a lot of foreign policy experience, Senate Foreign Relations Committee. Of course, similar for Senator Hagerty, he was actually an ambassador in the Trump administration to Japan, and notably, he wasn't just an ambassador. He had to renegotiate 2 trade deals with Japan and a very contentious military housing treaty with Japan for our troops that are based there as well. Rick Grenell, finally, he does have a lot of experience. He spent over 10 years at the United Nations. He was there in the Bush administration. He was, of course, an ambassador, acting DNI. He would claim, I think, to have been with Donald Trump the longest, to be, quote-unquote, the most MAGA, the most loyal. But I would know, even though he is very close to the former president, it's not like he's without foreign policy experience. There is a quite a deep resume there.
When you think of all these names, I think of all of them having a hawkish stance on China, maybe a little bit more adversarial to what's going on in Europe, especially Ambassador Grenell when it comes to Germany. But what about isolationism? Because I don't necessarily view Senator Rubio as an isolationist, the way I do view some individuals in the far right.
Well, the way that I saw the Trump term, the first term play out, I was in the second 2 years of that, is that President Trump surrounded himself with a lot of individuals who would argue and debate over policy, and ultimately he made the decision. I think that people often confused what America First foreign policy means with isolationism. I don't think that they're one and the same. I think what Trump has always said is that he doesn't want to put new American boots on the ground, that he doesn't want to, he doesn't want to see wars like Iraq or Afghanistan, where you end up with people doing multiple deployments over 20 years. I feel like we sort of litigated that as a society on both political parties. There's not really an appetite to be engaged and involved in new wars. He's much more focused on deterring and preventing war. And whenever he needed to take action, like removing the physical caliphate of ISIS in Iraq and Syria, he did that at the beginning of his administration. When he needed to take out Qasem Soleimani, he did that. So he had plenty of actions. I mean, remember, initially, he somewhat surged in Afghanistan. So we'll see if his new personnel and new policy choices are different from the first term. The first term, I did not see him shy away from making bold and tough decisions, and he certainly didn't shy away from trying to deter people like Xi Jinping and the Ayatollah Khamenei.
Morgan, we've also seen Elon Musk emerge as an informal advisor to Trump. He's been on calls with various world leaders with Trump, including Zelensky and Erdogan, reports suggesting both of those. What sort of role do you see Musk having when it comes to foreign policy in the coming White House?
You know, it looks like it's going to be an outside advisor role. I seriously doubt that he wants to divest and do a financial disclosure and go before the Senate for confirmation. Maybe he does, but that probably doesn't seem like it's in the cards. But President Trump, clearly had a very big advocate, a very big ally in Elon, and he's somebody who's been involved around the world. From my understanding from public reporting, he does hold a security clearance. So if that is still accurate and true, he would be able to be read into certain conversations. I think it's very normal for presidents to have outside advisors, especially ones that were key and helpful on their campaign, like Elon was.
And Elon, of course, has experience with Ukraine insofar as providing satellites and internet in Ukraine. There was some contentiousness about that. But Trump has said on the campaign trail that he could end the war in Ukraine in one day. What do you think the priorities will be for a Trump administration to achieve a goal to that magnitude?
Well, they're talking about people like my dear friend Bridge Colby, who's written a lot of books on China, who's very focused on China. There does seem to be a sentiment so far in the people that Trump is looking at to be very focused on China, to be focused on our allies in the Indo-PACOM theater. If you want to actually focus on China, you have to stop and be able to bring to a close these hot wars in Europe and in the Middle East. We're seeing, of course, the worst war in Europe since World War II. That's why I have argued quite loudly publicly that while we had the initial sanctions tranche against Ukraine, we didn't follow up, we didn't do secondary sanctions, and really I think a lot of the Biden admin actions over the past 2 years have only prolonged the war, have not sought to end that more concretely. Of course, when you look at Israel as well, you hope in the Middle East and Europe that you can help bring these wars to a close so you can focus on Asia. If they remain hot wars, then you're not going to be able to pivot as every administration tries to do, but unfortunately gets bogged down. So I would think that would be the top of the agenda for sure. And obviously, unfortunately, we still have an ISIS problem. We see ISIS has the capability to stop, for example, Taylor Swift concerts in Europe. ISIS Khorasan has a foothold in every province in Afghanistan. We've been reporting that there was an ISIS smuggling ring at the border. We haven't talked about the border. I can tell you, on the afternoon of January 20th, I'm sure that will be President Donald Trump's very first and most important priority is to get operational control of our southern border back in the hands of the United States and away from the cartels in Mexico.
Former State Department spokesperson Morgan Ortagus, thank you so much for joining us. Really, it's interesting when it comes to how this Trump administration is going to look. Personnel is policy. She spoke about Senator Haggerty. Maybe he goes to the State Department. And then someone like Ambassador Rick Grenell. But whoever doesn't get state, I imagine, is going to be Manus, his national security advisor.
Yeah, and this is going to raise major questions about the overseas situations. Just think of the conversation that we know that he did have with Benjamin Netanyahu. It's just interesting listening to Morgan talking about Iran. And this is where they squarely are aligned, which is Benjamin Netanyahu and Trump, they see eye to eye on Iran. And this is going to be the next evolution because it's about the amount of oil, not just that Iran is producing, but what they are exporting. And that is where they can do it.
Right. The sanctions are there. What I hear from individuals in this Trump world is that they prepare to enforce them more harshly on day one. All right. Coming up on the program, Neela Richardson of ADP ahead of the latest CPI report on Wednesday. You're watching Bloomberg Surveillance.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.